morning from here in Delhi, and hope as always each one of you are absolutely fine. So obviously whenever we start a particular session, curiosity arises actually what is supposed to be started. So answer is very simple and the chapter is much more simpler. So in this particular session we have decided to take up what we call final accounts, a chapter with which you are already very well familiar with right from what we call your initial stages when you started off with accounts. It was very much a part of your class 11th, it was very much a part of your BCom level, and now still it is a part of your syllabus too. So good thing about this particular chapter is that most of the concepts you are already acquainted with, so which also means indirectly or directly there will be lesser efforts I need to take to make you understand this particular chapter. But sometime when especially you are teaching at much more higher levels, suddenly you are asked to actually teach or lecture on a subject like final accounts. Sometime it becomes a little bit problematic for us also, where to start from and where to end at. But anyway, it is a part of the syllabus, so we have to cover the things, knowing very well that you all are very, very well acquainted with all the concepts pertaining to this particular chapter, final accounts. But as I said, it is a part of the syllabus, so we have to do this particular chapter. So we on our part, as always, shall try to actually give some greater inputs and insights to you so that you grab actually some benefit out of what we call these sessions, which are going to run for at least for the next 2-3 sessions. So final accounts, as I accepted this particular fact that you are very well acquainted with all the concepts, but as I also said that we on our part will definitely try to give you something to look at. Now as far as final accounts is concerned, what exactly the final accounts are and how these financial statements are prepared, of course that is going to be the crux of the discussion, no doubt about it. That is of course what the chapter deals up with. But before we move over to the fundamentals of this particular chapter, 2-3 points I would love to actually have from you. Do you remember in your class 11th actually, you started off with accounting equation. This is the first thing which you learned very well, you appreciated that also. Then after having acquiring a bit of command over what we call preparation of accounting equation, then you familiarized yourself with preparation of the journals. Do you remember? You familiarized yourself with journal proper and subsidiary books. Remember one thing, subsidiary books is also part of journal, correct? Journal is divided into some subsidiary books, as you know, for example, sales book, wherein you used to incorporate all the transactions related to credit sales. Similarly, purchases book, wherein you used to incorporate all the transactions relating to credit purchases, not cash purchases, credit purchases. Similarly, sales return books. Similarly, purchases return books. There used to be another subsidiary book in the form of bills payable book and bills receivable books. So these are the subsidiary books which you dealt up with and familiarized yourself with in the initial stages, isn't it? Then all such transactions which cannot be incorporated in these what we call subsidiary books, you used to incorporate those transactions in journal proper, isn't it? For example, cash sales, cash purchases, isn't it? So that means you acquired knowledge to prepare what we call journal. After having taken care of accounting equation and familiarizing yourself with what we call preparation of journal, then the next thing which you learned during various phases of education, you learn how to prepare the ledger. As you know, through journal postings, through journals we post the amount to the ledgers, isn't it? You learn what we call preparation of the ledgers. Then when you reach at the end of the year, whatever balances are there in the ledger accounts, those balances are taken towards our statement, which is known as trial balance, as you are very well familiar with that also. At the end of the year, you used to tally and balance your ledger accounts. Whatever balances are there in the ledgers, you used to actually put them into a statement known as trial balance. You used to prepare trial balance. Generally, trial balance commands 3 columns. One is particular, one is debit column, and another one is credit column. Suppose if in a ledger account there is a debit balance, you used to write it in the debit column of the trial balance. Similarly, if a ledger account is having a credit balance, you used to actually post it to the credit column of the trial balance. That is how you used to prepare the what we call trial balance. It means you learn your accountancy in different phases. First, you acquired proficiency in the preparation of the accounting equation. Then you familiarized yourself with the preparation of the journals. And once you became thorough and deft in the preparation of the journal, you learned how to prepare the ledgers. And finally, through ledgers, at the end of the accounting year, you learn how to prepare the trial balance. And once the trial balance is prepared, with the help of the trial balance, we prepare final accounts. Correct? This is the name of the chapter, preparation of the final accounts. But why we prepare the final accounts? We prepare final accounts simply to know the performance, operational performance of our business enterprise. See, actually, this is true not only in case of a business enterprise, this is also true in case of every facet of life. Whatever we do, whatever activities which we are involved up in, or whatever activities in which we indulge ourselves, definitely there is a hidden objective. The objective is that we want to know the results of our what we call efforts. For example, you are putting lots of efforts in studying, isn't it or not? Then what is the hidden objective over there? The hidden objective is to clear your examination with flying colors, of course. You want to assess your performance later on. So what is true of all the facets of life? Because generally all the activities, it carries a hidden agenda of assessing the performance. So what is true of all the facets of life also applies to a business enterprise. A business enterprise obviously is also interested in assessing its performance and how those performances are assessed. Those performances, yes, you are true, those performances are assessed through preparation of the final accounts. Correct? So this is the chapter wherein we are going to learn how a business enterprise actually prepares the final accounts. So let's move over to now the important aspects of this particular chapter. Here we go, and let me move over to this particular input. So as I said, final accounts, this is the chapter, and I am the first one to accept that you are absolutely very well thorough with this particular chapter, all the concept, but in spite of that, so many times I have told you now, we are trying to give you still something to look at and something to derive benefit out of this. So preparation of financial statement or simply final accounts, I have written. Final accounts. Very well versed chapter already, but in spite of that, we are doing this chapter because it is part of the syllabus. Final accounts. So at least now you know the different stages of accounts, preparation of preparation of journal, preparation of ledger, finally preparation of the trial balance, and once the trial balance is extracted through ledgers, then we move over to the preparation of the final accounts. The basic objective is to know and assess the performance of the business, operational performance of the business. Correct? But before we delve into that, how to prepare the financial statement, let me make 2-3 points absolutely clear, which, because you are at this level, you need to know. First of all, whenever we say final accounts, you need to understand where is the scale. The scale is here. Final accounts are of many types. Final accounts may be of corporate body, and pen is not working. What happened? Okay, it's a new pen, so sometime it creates problem. Well, so final accounts basically can be subdivided into two major factions, two major categories. That is final accounts of corporate enterprises, corporate enterprises. Final accounts could be of corporate enterprises, or final accounts could be of non-corporate enterprises. Non-corporate enterprises. Non-corporate enterprises. So final accounts, as far as is concerned, first of all, you need to understand that final accounts could be prepared by any type of enterprise. In fact, every type of enterprise is supposed to prepare what we call final accounts, their financial statements, because every type of enterprise is interested in what we call assessing the performances, isn't it? First of all, you need to understand what exactly we are dealing with at this particular level. Are we dealing with the preparation of the corporate enterprises, financial statements of corporate enterprises, or are we dealing with the preparation of the non-corporate enterprises? At your level, that is, at this particular level, we are dealing with preparation of non-corporate enterprises. We are not at all dealing with the preparation of the financial statements of corporate enterprises, because there are different rules, different regulations, different provisions, different acts which governs the preparation of the financial statements of corporate enterprises. There are many legal what we call complications, correct? So fortunately, right now, at this particular moment, you are not concerned with the preparation of financial statement of corporate enterprises. This is the first thing which you need to know. Second important aspect is that final accounts of non-corporate enterprises, when we say, so final accounts of non-corporate enterprises can be subdivided into further three parts. Final accounts of non-corporate enterprises could be of not for profit organizations, final accounts of not for profit organizations, not for profit organizations. So, final accounts of non-corporate enterprises, as just a moment ago I mentioned, could be of NPO. You have already done this chapter. You remember? You used to find out surplus through preparation of the income and expenditure. That is how an organization which is not for profit organization prepares its financial statements, correct? You have already done this chapter. Then final accounts could be of single trader. Final accounts could be of single trader. When we say single trader, it means we are talking about chapter single entry, and single entry is also known as accounting for incomplete records. Accounting for incomplete records. It is also known as accounting for incomplete records. So, whatever you did under this chapter was nothing but preparation of financial statement of a single trader. You remember there are two approaches to prepare the financial statements. In fact, to know the profits, one is net worth method and another one is conversion method. So, conversion method was nothing but preparation of financial statement of a single trader. You have also done this particular chapter, correct? Under the conversion method, you used to prepare what we call P&L account, trading and profit or loss account and balance sheet. So now, what we are doing? We are now concerned with preparation of the financial statement of profit-making entities. Profit-making entities. So these things should be absolutely clear. First of all, what we are dealing up with? We are dealing up with now such non-corporate bodies which are neither NPO, which are neither what we call single trading enterprises, rather they are enterprises and their objective is to earn profit. So profit-making enterprises. So right now, it means at this particular level, what you have in your course as far as preparation of the financial statement is concerned, preparation of the financial statement of NPO, which you have done, preparation of what we call financial statement of a single trader, which is nothing but accounting for incomplete records. And this one also has already been done. And now we are doing final accounts of profit-making entities. Final accounts of profit-making entities. So we are more concerned with this particular part as far as this particular chapter is concerned. Correct? So first thing should be absolutely clear. Is it clear to you or not? Now, if this particular part is absolutely clear, obviously we will move over to the next facet, how the final accounts of profit-making entities are prepared. So which means we are now concerned with final accounts of profit-making entities. Profit-making entities. In fact, whatever you have done with respect to final accounts at your earlier level in class 11th or BCom, so you have done only final accounts of profit-making entities. So same thing still continues, correct? So when we say final accounts with respect to profit-making entities, final accounts, what does it include? So final accounts means preparation of financial statements. So first of all, you need to know what exactly financial statements are. Financial statements. Pen is not working smoothly. I'll pick up another pen. This pen, it seems, is giving some problem. Okay, I will continue with that. Let me see. So financial statement, correct? See, financial statement as far as with respect to corporate enterprises, with respect to corporate means companies. In the context of the companies, financial statement is much more than what we call trading and profit and loss account and balance sheet, because it also includes cash flow statements and notes to the accounts, correct? However, in case of profit-making entities, in fact, in case of non-corporate enterprises, correct? As far as financial statements are concerned, we are dealing up with only profit and loss account and balance sheet. So financial statement with respect to non-corporate enterprises means preparation of profit and loss account and balance sheet. And remember one thing, when we say P&L, it includes trading account, correct? So there is no point in writing trading and profit and loss account. Even if I would say profit and loss account, it would mean actually trading and profit and loss account. Is it clear to you? So these are the two statements which we are supposed to actually become what we call acquainted of with. That means how these statements are drawn. Of course, these will be drawn out of the trial balance. That means in order to draw these statements, entire accounting year must have been over and there must be a trial balance before you. Then only you can proceed to actually prepare the profit and loss account and the balance sheet, as I said just a moment ago, correct? However, in order to prepare the financial statement, which you already know how to prepare, I need not require to go at such depths, but in spite of that, we'll try to actually move from the sketches itself, correct? So, you know, you used to prepare a trading account, a profit and loss account, then a balance sheet. You have done it so many times. In the trading account, towards the debit side, you used to write what we call opening stock, purchases, and all the direct expenses like carriage inward, freight inwards, wages. And towards the credit side, you used to put up items like sales and closing stock. And then you used to balance the trading account. You used to extract gross profit or gross loss. That gross profit or gross loss used to be posted to the P&L account. And in the P&L account, you used to write all the expenses related to office and administration, selling and distribution. Then you used to balance your P&L account, and after balancing, you used to get what we call net profit or net loss, which you used to transfer to capital account. Then after having prepared trading account, profit and loss account and balance sheet, trading account, profit and loss account, you used to prepare your balance sheet. You have done it so many times in the past, correct? But while preparing what we call financial statements, there used to be some adjustments, and among those adjustments, I have seen through my experience, and especially with the interaction with the student fraternity, I have seen that some of the students used to have a little bit of a scare with respect to adjustment in the context of bad debts and provision for doubtful debts. Remember one thing, at this level, what sort of question you expect to face in the examination? Would we get a lengthy questions like wherein we are supposed to prepare trading account, profit or loss account or balance sheet? No. Answer is absolutely no. You are not going to get a questions which you already know, to be very honest with you, and which you have already done in the past. As far as my opinion is concerned, because at this level, you have a special topic under final account that is with respect to bad debts and provisions. I'm sure a smaller question from that particular part will come in the examination. So you need to be very well jazzed up with these facets of bad debts, provision for doubtful debts, provision for discount, because these are the problematic area as far as preparation of financial statement is concerned, I have seen. So while preparing the financial statement from trial balance, you used to actually incorporate some adjustments. And among those adjustments, as I said, I have seen a student having a bit of a scare with respect to bad debts, provision for doubtful debts, and discount. So first of all, in this process of understanding the complexion of what we call financial statement, preparation of the financial statement, first of all, we'll try to acquaint ourselves with this tricky adjustment in respect of bad debts, provision for doubtful debts, and as I said, provision for discount. Correct? So first of all, we are going to learn that. So remember, it is also a part of your chapter. So now we are trying to learn, first of all, what we call how to carry out the adjustments, especially as I said with respect to bad debts, provision for doubtful debts, etc. So here we go, and now we start in real sense this particular chapter. So first of all, we are picking up the adjustments part. Adjustment part. Adjustments. Correct? So right now we are dealing up with some examples which you will have to write, of course, but all these examples are going to have facets of bad debts, provision for doubtful debts, etc. Correct? So I would like to take the toughest part first. So here we go. In order to understand this, let me give you some figures. This is your trial balance. Correct? As you know, trial balance has 3 columns. This is trial balance at the end of the accounting year. Trial balance. This is trial balance, say as at 31st/3/20. This is details of particulars column. This is your debit column. This is your credit column. If some of you want to write, you can write too. Correct? Now, at the end of the accounting year, your trial balance shows these balances. Debtors. Debtors are having a debit balance of say 5 lakhs. Bad debts. Bad debts is having a balance of say 5,000. Besides, your trial balance is reflecting yet another item, provision for doubtful debts. Doubtful debts. Provision for doubtful debts. Your trial balance is reflecting these balances, and this balance is towards the credit side, and nothing else is given. So while preparing your financial statement, how you are going to actually put these items? Oh, that is the major question. So, as we know, when we say final accounts, it means profit and loss account. Whenever I would say profit and loss account, it would include what we call trading account. And this is your balance sheet part, correct? This is your trading and profit and loss account. And this is your balance sheet. I have written P&L and balance sheet, correct? How to incorporate? Before you incorporate these items, two fundamental things should be known to you. One is you need to know the meaning of event, and second, what exactly the event is. See here, first of all, you need to understand that trial balance is an event. When we say event, it reflects the situation on a particular day. That means, let us say on 31st of 3/2020, it is reflecting this situation. Correct? On a particular day. It does not reflect a situation of a period. Correct? It reflects the situation of a particular day. So as at 31st of 3/2020, the position is that your debtors are worth 5 lakh and your bad debts 5,000, provision for doubtful debts is 10,000. Remember one thing, trial balance is an event. Any statement, even balance sheet is an event, correct? All statements are event. Now, you need to inculcate and imbibe it quite well and store it in your memory that any item which is extracted from an event will be posted only once. For example, trial balance is an event and there is an item, debtors. I want to extract this item and put it either what we call in trading and profit or loss account or in balance sheet. But this will be posted only once. Is it clear to you? So debtors, as each one of us are very well familiar with the fact that is an item of balance sheet. So it is an asset. We are going to move over to the asset side, and towards the asset side I am going to write debtors. So I have written here debtors. So debtors which are appearing in the trial balance will be posted only once. Why? Because it is an event. Is it clear to you or not? In fact, any item which is appearing in the trial balance will find only one posting. It is as simple as that. So if somebody asks why, you simply give the reason, because trial balance is an event. Is it clear to you? Any posting from an event statement will always be only once. Similarly, bad debts given in the trial balance 5,000. You will post it only once. But we know that bad debts is neither an asset nor a liability. Bad debts is a loss, and all the losses and expenses are put towards the debit side of P&L. So we are going to write bad debts towards the debit side of profit or loss account, that is 5,000. Only one posting. Many students commit a mistake here. The moment they hear word bad debts, not only they write it in the P&L account, unnecessarily they subtract it from what we call debtors also. Don't commit this particular mistake. Remember, you are posting this item from trial balance. And so many times during this particular discussion and discourse, I have already told you that an item from trial balance will be posted only once. Because something which is given in trial balance means it has already taken place. Something which is given in trial balance means it has already taken place, it has already been incorporated. What does it mean? It means, see here, pay attention. Suppose I have written here bad debts. It means I have already passed this entry. I am going to write this entry with the red pen. It means this entry has already been passed. Bad debts in the trial balance of 5,000 reflects that this entry has already been passed. Whenever bad debts will take place, bad debts is a loss, you are going to debit bad debts account. You are going to debit bad debts account. And whenever bad debts will take place, your debtors will get reduced. So in order to reduce debtors, you will credit debtors. I said this entry has already been passed because bad debts is appearing in trial balance. And because bad debts is appearing in the trial balance, it means actually that we have already passed this particular entry. And if we have passed this particular entry, it means our debtors have already been reduced. This figure of debtors is after bad debts, it means. You have to analyze it this way round. So that is the reason. Now you need not require to subtract 5,000 again from bad debts, again from debtors. Are you getting my point? So simple rule is that Bad debts which is appearing in the trial balance will come only and only towards the debit side of profit or loss account. No further postings are needed. You need to remember and what we call, remember it very well, that any item from trial balance will be posted only once. Correct? This is one rule, but I'm trying to give you the logic also, because if the bad debts is given in the trial balance, that means you have already incorporated this entry, you have already reduced your debtors, it also means. Correct? So that is the reason you are going to put it now towards the debit side of your P&L. Now we come over to the provision for doubtful debts. Now this is something which can create a bit of a trouble. It creates trouble to some students, I have seen actually. So I will try to actually elaborate this particular point. And once you become thorough with it, then half the battle is already won, it means. Let's have a look. I will try to make you understand where to post this item, what does provision for doubtful debts which appears in the trial balance reflects, what are its repercussions, how we have to deal up with. So in order to understand that, just have attention and try to understand this particular example. How to make you understand? Point is this, sometimes it also is a problem. Let me first of all pick up, the pen today is not working, there are lots of pen, but creating bit of a problem. Let me see which one will suit me. Okay, I will pick up this one. Right. I was telling you how to incorporate provision for bad debts. Let me have a sip of coffee also, correct? Right, thank you. With your permission, I took the sip. And now I will try to elaborate the point. Provision for bad debts which appears in the trial balance, I just told a moment, sometimes gives bit of a confusion to the student fraternity. So once you will become logically, comprehensively depth with this item, I'm very sure rest of the chapter will almost be like a stroll in the park, as I keep on saying so often. Correct? So in order to make you understand, I will have to look out for an example. You must have seen in your homes that often your mother actually fights with your father with respect to the fact that you keep yourself always busy, never extract any time for the family, and you don't have any time for us also. Haven't? Often. So many times. And what is true of everybody's household, that is also true with respect to me. Even my wife often actually chides me that you always keep yourself busy with the work and work and work and never have any time for the family. So, what can we do? After all, work is also very much a necessity, but at the same time, their complaints are also legally correct. So, my wife once actually chided me, as I said, virtually scolded me, you can say, that this is too much now, you will have to do something. So I promised, well, the next Sunday I will take you for a shopping. The word shopping moment I uttered, there was a big smile on the face of my wife, correct? So, as promised, next Sunday, the Sunday approaches. And I remember my promise. I know that today means this day, next Sunday, correct? I will have to take my wife for shopping, wife's shopping. So what I did, see here, I extracted rupees 50,000. I pulled out 50,000 from the Almirah. I extracted 50,000 rupees from the Almirah. Only 50,000 were lying over there. So I extracted 50,000 and put them into my pocket. Put them into my pocket. Need I to tell you what does it mean? I extracted 50,000 rupees from Almirah and I put them into my pocket or my wallet. Instead of pocket, you can also write provision for wife's expenses. Provision for wife's shopping expenses. can also write this way. So I was under the impression I'm going along with wife, that too after such a long period of time, correct? And that too for shopping purpose. So quite obviously, perhaps this 50,000 will also be a lesser figure. But anyway, I was having only 50,000. I extracted that, put them into my pocket, and happily, my wife accompanied me to the market. We reached the market. Here the market is, correct? And inside of my heart, I was very worried. 50,000 will be gone in a moment, right now. But my luck was on my side. What a brilliant luck I was having. The moment we reached the market, and before we could enter any shop or plaza or mall, suddenly what happened, as I said, sheer out of my luck, I found 3 wonderful ladies who were deep friends of my wife, met her in the market. Oh my God, what a luck. My wife's 3 friends, all ladies, and you can understand then what would be the next thing I will about to tell now. Obviously, when 3 ladies along with wife are there, so obviously most of the time went over there in chit-chatting, having what we call lots of discussions and stories and whatever you may call it. So all in all, it was a wonderful thing for me. Luck was by my side. I was very lucky because most of the time went in their accompaniment, in their what we call gossips, as we know, and lesser time now remained for the shopping. So luckily, I was under the impression that even 50,000 will be lesser amount for the shopping. But since most of the time was consumed by their talking, we are left up with very meager time for the shopping. And finally what we did, to my luck, my wife did not spend entire 50,000, only 40,000 were spent out of 50,000. I was under the impression I might have to spend much more than that. So I kept my cards ready also. But I was very fortunate that even out of 50,000, something was still in the balance. So in the shopping, as I said, on 40,000 were spent out. Shopping out. So the point about which I am going to talk about is that you can understand the fact that even though we were left off with lesser time, she spent out 40,000 rupees. I wondered, had she used the entire time in shopping, what would have had happened then? Anyway, point you need to understand is that I had made a provision of 50,000 under the impression that this 50,000 will be gone due to shopping spree of my wife. But out of that 40,000, only spent 10,000 is still left. 10,000 is still left. So lucky I am. Now, try to understand this over here. What is true in case of me? Now I will try to compare it with the situation of an enterprise. I was expecting an expense. When you are expecting some expense or some loss in accounts, generally we make provisions. Provisions, are you getting my point? In order to meet any contingent expense. So whenever there is expectations of any loss or any expense, generally an entity actually makes a provision. So first thing which you need to comprehend is that whatever provisions are made in accounts, those provisions are made out of profit and loss account. Correct? When I made a provision, I made the entry Elmera account debit to pocket account. From Elmera, I plugged out 50,000, put them into my pocket. Similarly, a business enterprise, when it finds that there might be some debtors who may turn bad in future, right now, there is just an expectation that there are some doubts that some of these debtors might actually turn bad. So these are known as doubtful debts. So enterprise expects that there may be a loss. And as you know, as per the principle of conservatism, all the anticipated losses must be provided for. So enterprise, what it does, it passes an entry. The entry is, instead of Elmira, business enterprise will write profit and loss account debit. 2. As I wrote provision for wife's expenses account, the business enterprise will write provision for doubtful debts account. Provision for doubtful debts account. Suppose there is a business enterprise and it has a hunch, it has an expectation that some of the debtors, let us say to the tune of 50,000, may turn out to be bad. So it made a provision of 50,000. Business enterprise will pass this entry, profit or loss account debit, to provision for doubtful debt, as I said. But by the end of the year, entity found out that bad debts were only 40,000. Entity was expecting bad debts of 50,000, but bad debts were worth rupees 40,000 only. So that means entity had already extracted 50,000. Those 50,000 were not utilized. Entity was expecting a loss of what we call 50,000. So entity extracted 50,000, correct? But bad debts turn out to be 40,000. So we may say, out of this provision of 50,000, because 40,000 will be used in meeting the bad debts, 10,000 will still be left over. Entity was under the impression that 50,000 may be a loss in the form of bad debts. So entity created a provision to the extent of 50,000. So entry was P&L account debit to provision for doubtful debts account. But bad debts amounted to only 40,000. So it means some balance is with the entity. Entity has already plugged out 50,000, but only 40,000 were used in the form of bad debts. So 10,000 balance is still there in the provision for doubtful debts account. You must understand this particular fact where that sheet has gone. The provision for doubtful debts which appears in the balance sheet, in the trial balance, provision for doubtful debts which appears in the trial balance is nothing but the leftover part of the provision which the entity must have had created. See here, entity had created 50,000 in this example. Because bad debts amounted to 40,000, so 10,000 is the leftover part. Similarly, in this question or example, whatever is given in the trial balance in the form of provision for doubtful debts, you need to understand that this is leftover part of the provision. We do not know in this example how much provision entity had created, and moreover, we are not concerned with that. We need to know only one thing, that whatever provision we have had created, this is the leftover part of that particular provision. Now you try to understand this again. When you created a provision in this example, in the expectation that their loss would be of 50,000, your profit or loss account got reduced. But out of that, 10,000 is still left out. So it is your bounded duty now to retransfer this 10,000 to the P&L. When you will transfer this 10,000 to the P&L, your entry will be provision for doubtful debts account debit to P&L account. So you will retransfer because this is leftover balance. So again you will credit it to profit and loss account. The point I want to bring to your notice is that whatever balance you find in the trial balance with respect to provision for doubtful debts, first of all, you need to understand that this is the leftover balance. You need to understand that this is leftover balance. Leftover balance. Because when you must have had created the provision, you must have had debited the P&L. Now whatever is left, it is your bounded duty to retransfer it to your P&L. So this is your leftover balance. So you need to now put it again back to the P&L. When you extract it, your P&L got debited. When you will retransfer the balance, your P&L will get created. So that is the reason provision for doubtful debts, which appears in the trial balance, and so many times I have told you now, any item which appears in the trial balance will be posted only once. So this item you are going to put it towards the credit side of your profit and loss account, provision for doubtful debts. So simple rule is that bad debts appearing in trial balance will come only towards the debit side. Provision for doubtful debts appearing in the trial balance will come over to the credit side of the P&L. No further adjustments are needed because postings of trial balance will be done only once. This is the first and fundamental rule of what we call with respect to bad debts and provision. We will take over many more cases in the upcoming session. Last one, we were discussing the bad debts, provision for doubtful debts topic, and we will still continue with that. We did one, and I hope now at least you know the treatment of bad debts appearing in the trial balance and the provision for doubtful debts which appear in the trial balance. We pick up another example. Of course, we are going to do lots of examples unless and until we would feel actually that you are very well acquainted with these terms. So this is example 2 now on the pipeline, example 2. Correct? So this is your trial balance. Trial balance. Correct? This is your debit column. And this is your credit column. Once again, I am giving you the figures, debtors as 5 lakhs. Debtors 5 lakhs, correct? Then, as we wrote in the last example, again I am writing bad debts, say rupees 5,000. Then provision for doubtful debts. Provision for doubtful debts. Provision for doubtful debts, let us say 10,000. Similar figures. These are the figures of the trial balance. Now this time you have been given some adjustment too. Adjustments. So some adjustment is also available this time now, correct? In the adjustment, let us say it is given write-off. Just wait for a while. So, write-off further bad debts, let us say $10,000, and B, create a provision, create a provision for bad and doubtful debts, for bad and doubtful debts. At the rate of 10%. So this time adjustment is also given. How to incorporate all these balances and the adjustments in the financial statement. This is your profit and loss account. This is your balance sheet. Correct? Profit and loss account. And this is your balance sheet. Just keep those rules which I mentioned in the last session, that an item which appears in the trial balance will be posted only once, and similarly adjustment will have the opposite impact. Adjustment, whatever is given in the adjustment, will be posted more than once, correct? An item which appears in the trial balance will be posted only once because trial balance happens to be an event, and adjustments will be posted more than once. Is it clear to you? See here. First of all, debtors, you coolly go over to your balance sheet towards the asset side, write debtors. You have written here debtors, that is 5 lakhs. Correct? 5 lakhs. This posting is incorporated. It is appearing in the trial balance. So you have already posted it here. No further treatments are needed. Now with respect to debtors. Bad debts which is appearing in the trial balance just a moment ago, I mean to say in the last session, I did talk about this particular fact, that it means you have already passed the entry bad debts account debit to debtors account. Because you have already passed that entry, you need not require to subtract it from your debtors. Now you have to do it. Now what you have to do is just to put it towards the debit side of your profit and loss account. You will write here bad debts. It is better to write in the bracket as per trial. As per trial means bad debts which are appearing in the trial balance, you are posting them, those bad debts, towards the debit side of your profit and loss account. Provision for doubtful debts, I did talk about this. This is the leftover balance of the total provision created earlier. I also told you, because this is the leftover balance, we have to post it towards the credit side of P&L account. So provision for doubtful debts. Provision for doubtful debts, D/D, 10,000. You write in bracket as per trial. I am simply writing trial. It means as per trial. As per trial balance, so that examiner should not get confused. So as far as items which are appearing in trial balance are not going to pose any problems, correct? Provided we know the logics. Now we move over to the adjustment part. Something which is given in the adjustment, it automatically means that you haven't adjusted these items. That is why these are adjustments. Logically, these are items which haven't been adjusted so far. So in order to adjust these items, first of all, write off further bad debts. Your entry will be, you will have to pass 2 entries. One entry will be bad debts account debit to debtors account, because this item hasn't yet been incorporated. It is given in the what we call adjustment. So now you are incorporating it. It is a loss to you. You will debit bad debts, and because of this your debtors will reduce. So you will write here 2 debtors, 10,000, 10,000. This is one entry you are going to pass with respect to this adjustment. This is first entry. Because of this entry, your debtors are getting credited, so your debtors will get reduced. Bad debts account debit to debtors account. So your debtors will get reduced due to this adjustment. Amount is 10,000. Secondly, your bad debts is a loss. You are going to take it towards the debit side of P&L. So your next entry will be profit and loss account debit to bad debts. Profit and loss account debit to bad debts. This is your second entry. Now because of this entry, your bad debts given in adjustment will also appear here. So as you can see, bad debts which are given in the adjustment are being posted twice. Once towards the debit side of P&L, and second as a reduction from the debtors. Correct? So bad debts, you will write in bracket as per adjustment, that is 10,000. So debtors, any information which is given with respect to debtor in the adjustment will be posted twice. Once it will appear, as I said, what we call debit side item, and secondly it will be subtracted from the debtors. Similarly, now come over to the provision. This time you are supposed to create a provision. And just few minutes back in the last session, I did tell that whenever we create provision, we pass an entry, profit and loss account debit to provision for doubtful debts account. This is the entry which we normally pass. Correct? This entry you will have to pass now with respect to this information. When you will pass this entry, but the question is how much provision you are going to make. In order to make the provision, first of all, you need to have a look what is the balance appearing in your debtors. Right now, balance in debtors is 4,90,000. But out of this, you feel that 10% may turn bad. So with respect to that, you are creating a provision. So because you are creating a provision for doubtful debts, indirectly you are feeling that out of 4,90,000, 10%, 49,000, that is 10% of 4,90,000. Your debtors are worth 4,90,000, but out of that you are having a feeling that 49,000 may not actually give you your money. So it is better to consider debtors instead of 490 as 4,41,000. Your debtors is 4,90,000, but you have a suspiciousness that out of that 10% may not give you the money. So you're considering it as an anticipated loss. So you will have to reduce your debtors by this amount. So debtors will be 4,41,000. At the same time, because it is a loss to you, you are going to put it towards the debit side. Don't get confused. Provision for doubtful debts which appears in the trial balance will come over to the credit side. But any information which is related to debtors will be written towards the debit side of the P&L and at the same time will be subtracted from the debtors. So this provision is through adjustments. So you will write here 49,000. This is how ultimately your information will be reflected. I hope things have become clear to you now. Is it clear to you? So rules are very simple. Bad debts which appears in the trial balance and provision which appears in the trial balance will be posted only once towards the debit and credit side respectively. These items will not affect the debtors. But any information which is given in respect of what we call debtors will be adjusted at two places. As I said, any information related to debtors will be subtracted from the debtors, number one, and will also appear towards the debit side of the P&L account, that is number two. Is it clear to you or not? So after having incorporated this, we move over to yet another example to equip you thoroughly. Example 3, sorry. Example number 3. Now in this particular example, let us say, once again I am giving you a trial, and in the trial we have items. This is debit side, this is credit side, amount of debtors. You can expect such questions. Let us say debtors amount is 5 lakhs. Amount of debtors is 5 lakh, correct? You are given bad debts once again. Let us say amount of bad debts is 10,000. You are being given provision for doubtful debts in the trial. Provision for doubtful debts, let us say, is 20,000. You are being given some adjustments. These are adjustments. Adjustments are not given in the trial, remember one thing. Adjustment number 1, write-off further bad debts write off further bad debts of rupees 20,000. Second, create a provision of 20% for bad and doubtful debts. For bad and doubtful debts. Bad and doubtful debts. Third, create a provision for discount, a provision for discount at the rate of 10% for debtors. For debtors. Correct? So this is the information which is given to you now. How to incorporate this information? Correct? This is my trading and profit and loss account. This is my balance sheet. Correct? Profit and loss account. This is balance sheet. First of all, your target should be to incorporate the information which is available in the trial balance. Debtors, now you should know very well where it will come. It will be posted towards the debit side, towards the asset side. So we simply write debtors 5 lakh. Once you have written the debtors, then you know that what treatment will be done with respect to bad debts. Bad debts which appears in the trial balance, we are now familiar with, will come only once, and debt towards debit side of profit or loss account. I'm writing in bracket T. T means as per trial balance, just for reference. 10,000. 10,000. No further posting. Provision for doubtful debts which appears in the trial balance will be posted towards the credit side. I am using the short form provision for doubtful debts as per trial. That is 20,000. This is the leftover balance. So it will be reposted to the what we call P&L towards the credit side. Now we will have to take one by one all the adjustment. Rule is very simple. Any adjustment related to debtors will reduce the amount of the debtors and will also put towards the debit side of P&L. Correct? For example, create further bad debts of 20,000. As I said, it will reduce the debtors. So these are adjustments. My entry is bad debts account debit to debtors. First entry. It will reduce the debtors by 20,000. So balance in debtors account now is actually 4,80,000. And this amount of 20,000 will also be presented that is as per adjustments 20,000. So 2 postings have been done. Now we take the case of provision. First of all, we will subtract it from the debtors. Provision for doubtful debts. Provision for doubtful debts. At the rate of 20%. 20% of 480, that is 96,000. this provision will also be written towards the P&L because you are creating a provision. When you create the provision, your P&L reduce. Your P&L shall reduce. So as per adjustment 96,000. Simple rule. All the adjustment with respect to debtors first of all will be subtracted from the debtors, and then where is the calculator? Actually I am looking for, I am not able to find it. No calculator right now. Anyway, just wait, let me check whether there is any calculator or not. Satinder? Satinder? Calculator है क्या? Calculator. Yes, now the calculator is in my hands because I would need it further also. So 4,80,000 minus 96, that gives me 3,84,000. So now my debtors are 3,84,000. Out of 5,20,000 are bad. Actually, they have turned bad. So I was having a debtor of 4,80,000, but I suspect that out of 480, 96,000 worth of debtors may turn out to be bad. So I've subtracted 96,000. So I have a feeling that safe debtors, good debtors are worth 3,84,000. I'm very sure about that. These debtors will pay me back their money. So often in enterprise, what it does, because we know that debtors will pay the money on the due date. So sometimes we want them to pay before the due date. So in order to make them pay before the due date, what enterprise does sometime, actually it gives what we call some incentive in the form of discount. That we will give you our discount if you are going to pay much before the what we call due date. So whenever an enterprise gives a discount, indirectly we are going to receive lesser money from the debtors. So whenever it is given in the question that create a provision for discount, that means your entity is thinking that we are going to give them a discount which is a loss to us. So we are going to receive lesser amount from the debtors, so it will create a provision. So whenever provisions are created, our P&L will get reduced. At the same time, debtors amount will also get reduced. So provision for discount. Provision for discount. So provision for discount, you are going to subtract first of all at the rate of 10%, so 38,400. You will subtract it from debtors, correct? So in the balance sheet, debtors will be now 3,84,000 minus 38,400. That is 3,45,600. This much of debtors will appear in the balance sheet. 3,45,600, and provision for discount will be written towards the debit side. Provision for discount. Any adjustment with respect to debtors, as I said, will find place at two places. One, it will be reduced from the debtors, and second, it will find place towards the debit side of the P&L. I hope now you are getting an idea with respect to the treatment. So these sort of questions you can expect in the examination. To be very honest with you, I don't think you will get questions of preparation of trading account P&L, something like that. You are going to get questions of such what we call velocity. Correct? So after acquainting ourselves with what we call treatment of bad debts, provision for discount, and provision for, of course, bad debts, now we are moving over to some other adjustment. Although you are familiar with all these adjustments, even I know, but in spite of that, we shall cover those up. Correct? So that is second type of adjustments which we are picking up. This relates to your outstanding expenses. Correct? Outstanding expenses. Outstanding expenses. Outstanding expenses. First of all, what do you mean by that? Outstanding expenses means expenses which are due but not paid. That means till up to the end of the accounting year, these expenses haven't been paid in spite of the fact that they had become due. Correct? So you haven't paid these expenses. These are known as outstanding expenses. So we try to grab the treatment now. It is better to grab the treatment with the help of trial. That helps, I think, isn't it? So this is the example before you. This is debit balance and this is credit balance. Let us say item given to you is salaries. If salary is given in trial balance, it means this amount you have already paid. Let us say it is 1 lakh. And in the adjustment, let us say you are provided with an adjustment salary outstanding. Salaries outstanding means these salaries have become due, but you haven't paid them off till the end of the accounting year. Salary is due or outstanding. Rupees 20,000. So what will be the treatment? I have already told you any adjustment will encompass two treatments. Correct? This is your trading and P&L and this is your balance sheet. In the P&L account, just wait, P&L and balance sheet. First of all, always incorporate the item which is given in the trial. So salaries you are going to put towards the debit side, 1 lakh, only treatment. Item which appears in trial is posted only once, as you know, correct? Now salary is outstanding. Salary is outstanding, and as you know, the treatment, first of all, it will be added to the relevant item plus outstanding. I'm using the short form, 20,000. You will write in the outer column 1,20,000. Salary outstanding once it will be added to the relevant item, whether it relates to trading, whether it relates to P&L. Secondly, then because it is an outstanding amount, that means it is yet to be paid, so it is a liability for you. You are going to put it towards the liability side. Salary is outstanding, 20,000. That means the entry which you pass to incorporate, actually you need not require to pass the entry, just for the sake of understanding, your entry is salary account debit, because due to this your expense will rise. Salary account debit to salary outstanding account. Because you haven't paid this much of amount, it is yet to be paid. So 20,000, 20,000. Salary outstanding is a representative personal account. Correct? So because of this, amount of salary will increase and balance will be left in the salary outstanding account. It will be reflected towards the liability side. Regarding outstanding expenses, I have seen students committing some mistakes. For example, suppose this is your trial, this is your debit column, this is your credit column. Let us say outstanding, salaries outstanding. Let us say salary is given here 1,20,000 and salary is outstanding this time is given in the trial. Now if salary is outstanding is given in the trial, what does it mean? I gave you a clue. Something which is given in the trial will be posted only once, isn't it? And something which was given in trial also means that its treatment has already been done. So this time, how these items will be incorporated? No adjustment this time. Salary outstanding is given in the trial. Correct? First of all, you will write this amount salaries. Needless to elaborate it, as we know that salaries will always find a place towards the debit side of P&L. 1,20,000. You are going to put them towards the debit side of P&L. Now salary outstanding is given in the trial. As we just saw a moment ago, that if it happens to be given in an adjustments, then first of all it is added to the relevant item, then it also appears towards the liability side. However, this time actually it is given in the trial and posting will have to be done once. If it is given in trial, it means you have already passed this entry which I just mentioned earlier. If you have passed this entry, that means you need not require to pass this entry. That means now you need not require to increase the expenses. That means this amount has already been added. Is it clear to you? So only thing is that salaries outstanding now will appear only towards the liability side. This is the only treatment. Item which appears in the trial is posted only once. Is it clear to you? This I just wanted to bring to your notice. I have seen students sometimes unnecessarily add this item. So if it is given in the trial, you will have to actually post it only once. Is it clear? So this was regarding outstanding expenses. Similarly, now we take the third one, which is related to prepaid expenses. Prepaid expenses. Prepaid expenses are also referred to as unexpired expenses. Unexpired expenses. Also, it is referred to as expenses paid in advance. Expenses paid in advance. Expenses paid in advance. What does it mean? First of all, let me clarify the things. Let us say your accounting year this is your accounting year, correct? Let us say your accounting year starts from 1st of January 2020. It will end, your accounting year, it will end as at 31st of 12, 2020. Your accounting year will end over here, correct? Is it clear to you? Let us say rent per month is 10,000 rupees. Rent of premises, rent of office premises is rupees, let us say 10,000 per month. Correct? Let us say on this date, on 1st of January, you paid to the landlord, paid rent of rupees 1,50,000. On 1st of January, you paid a rent of 1,50,000. Actually, your rent is 10,000 per month. What does it mean? It means you have paid rent for these 12 months, these 12 months means these 12 months of this accounting period, correct? Besides, you have paid the rent of next 3 months. Next 3 months also. Because you have paid 1,50,000, your rent is 10,000 per month. So logically in the current year you should have paid 1,20,000, but you paid 1,50,000. So that means out of 1,50,000, 1,20,000 relates to current period and 30,000 relates to next 3 months from the end of the current accounting year. Because when you will reach at the end of the accounting year, you will feel that expenses in the form of the rent should have been 1,20,000, but we have paid 1,50,000, that means 30,000 we have paid earlier for the next 3 months. So that means on this date, in accounting terminology, we will call this 30,000 as an unexpired amount. Unexpired means its services hasn't been utilized. Still this amount is unutilized. Unexpired means it is not yet died, it is not yet dead, and its benefit is to be received. Because this amount reflects that something is receivable against the same, because we can receive services against this amount in future. So on this date we may have this feeling that this 30,000 is unexpired, it is prepaid, it is paid in advance, and against it some services are yet to be received. So that is why it is treated as an asset. First of all, this 30,000 will be treated as unexpired amount, or you can call it advance amount, unexpired amount, or you can call it as prepaid expenses, or you can call it as expenses paid in advance, whatever you may like to say. First of all, you must understand the meaning of unexpired. Now, I give you a trial balance. In the trial, balance, this is your debit side, this is your credit side. Let us say written over here, rent. Now something which is written in the trial balance means it has taken place. So rent itself means it has been paid, because it is written in trial balance. The word paid is not necessary here. Let us say rent paid 1,20,000, and you are given an adjustment. Rent in advance is 30,000. Rent in advance 30,000. You know the treatment, even I know, but still just we are trying to recapitulate the things and try to put the matter straight. So this is your P&L. Item which is written in the trial will be posted once. So rent, you are going to write it over here, 1,20,000, because this amount has been paid. Actually make it 150, sorry, because I just wanted to frame this question out of this example. Rent paid is 150. So you are going to write it here 1,50,000, correct? Because this is appearing here, you are going to put it over here. Now rent in paid advance. So this amount you have paid in advance. You haven't driven services worth 1,50,000, you have driven services of only 1,20,000. So logically, you need to reflect in the P&L account your real expenses, that is 1,20,000. Your expenses are not yet 1,50,000 because you haven't driven the services against the 1,50,000. You have driven the services against 1,20,000. So rent in advance or prepaid expenses or unexpired amount will be subtracted it will be subtracted, number one. Number two, because it is considered as an asset. Why it is considered as an asset, I have already told you, because it is a sort of receivable in the sense that you are supposed to receive some services against this. So it will be reflected as an asset. So in the balance sheet, you are going to put it towards the asset side. You are going to write here prepaid rent, or you can write rent in advance. Prepaid rent, that is 30,000. This is how you are going to, what we could take care of rent paid in advance. Is it clear to you or not? Now, sometime what happens, rent or simply unexpired expenses or advances or prepaid are given only in trial balance, as is the case with outstanding expenses. Suppose you are given information like this: rent, debit, credit, 1,20,000, and you are being given rent in advance or prepaid rent in the trial itself. Let us say 30,000. If rent in advance is given in the trial balance, obviously it will come only once, correct? So I need not require to actually time and again repeat the same points. I have already told you so many times, item which appear in the trial will be posted only once. So this time when you will prepare your profit and loss account, you must understand that its effect has already been delivered because it is actually given in the trial. That means this item 120 is after deduction of 30,000, correct? So you will write here in the P&L rent 1,20,000. You need not require to subtract this time 30,000. Rent paid in advance you will simply put towards the asset side. Rent in advance. I hope you are getting an idea. If item is given in the trial itself, then what should be the treatment and why this treatment should be. Is it clear to you? Right. After taking care of this particular aspect, now we move over to accrued incomes. Accrued incomes. Accrued incomes, what does it mean actually? I will let you know in a short while. Let me draw out some figures. Let us say commission. Okay, no need to write received. I'm writing it towards the credit side because I want to reflect it as an income. So commission I am giving you here, let us say 1,20,000. And in the adjustment, I write this is your adjustment. In the adjustment, say it is given to you commission receivable. Commission receivable. Commission receivable means, it means commission earned but not yet received. Earned but not yet received, or yet to be received, but not yet. When we say not yet received, it means till the finalization of the accounts, till that date, it hasn't yet been received. So what is accrued income? Accrued income is something which you have earned. That means you have a right to claim that income, but till the end of the accounting year, that income is still due. It is not what we call receipt by the enterprise yet. It is just opposite of outstanding expenses, correct? As in case of outstanding expenses, first we add it to the relevant item, then reflect it towards the liability side. This time we will say the similar situation, but only thing is that this time it happens to be an income rather than what we call expense. So we are going to add first of all, of course, to the relevant item, but towards the credit side of P&L, and then whatever part we are supposed to receive, instead of putting it towards the liability side, we are going to put it towards the what we call asset side, because it is an asset. So it is just opposite of your outstanding expenses. So in the P&L, you are going to add it to the relevant item. First of all, commission, it is given in the credit side, so it means it is an income. $1,20,000. Let us say commission receivable amount I haven't written yet. Let us say it is 30,000. So first of all, you are going to add it because it reflects that you were supposed to receive 30,000 in the current year itself, but you did not receive. So full income in the form of commission should have been 1,50,000. So we will put it 150 here. Out of 150, we have received 120. But 30,000 is still to be receivable. It will be reflected towards the asset side. We can write accrued commission also. Commission accrued. Accrued means receivable. In the balance sheet, you are going to reflect it this way. Is it clear to you or not? Fine. I hope so. Suppose you are given information like this. Commission. It is being reflected towards the credit side. You have to be a little bit cautious with respect to items. When they are given towards debit side, they could be either expense or an asset. If they are given towards the credit side, they could be either incomes or what we call liabilities. Now commission here is given on the credit side, so we presume commission is actually 1,50,000. In fact, okay, 1,50,000. And this time, accrued commission, you must understand the meaning of accrued. Accrued commission means something which you were supposed to receive but you didn't receive it so far. Accrued commission. Accrued commission generally will have debit balance in case if it would be what we call reflected in the trial. Let us say it is 30,000 because it is receivable. Correct? So this is the situation which is given to you in this case. Now, how to post these items in the financial statements? Needless to add that these items have been reflected in the trial. No adjustment. So as far as P&L is concerned, commission will be posted over here. $1,50,000 full amount. Now you need not require to add or subtract because nothing is given in the adjustment. And accrued commission, it is given in trial. It means this part has already been added. That means whatever amount is being reflected in the form of commission, that is after the addition of the accrued income. So you need not require to add it again because accrued commission is given in what we call trial, it means its effect has already been incorporated. No further treatment is needed. All you need to do is to now post it towards the asset side. So you move over to the asset side, balance sheet part, right over there, accrued commission. $30,000. Is it clear to you? This is how the treatment of the accrued income shall be done. Is it clear to you or not? If it is clear to you or not, we will take another treatment of unearned income. What is unearned income? It is opposite of earned income. Unearned income. Unearned income, to be very honest with you, it is logically in contrast to the expenses paid in advance. In case of expenses which you have paid in advance, correct, you are not driving some portion of the services, some portion is services against some portion of the amount, correct. Similarly, there is a case of unearned income. That means you have received the amount, but out of this amount some portion is such which you have received, but logically it is not yours. It is a sort of amount received in advance by the enterprise. It means enterprise has received some amount. Either enterprise hasn't given services against the same, or entity hasn't what we call given some goods and services against the same. Logically, it is still unearned. You haven't earned. Earned means when you have a right to claim that. So it is unearned. You do not have the right now. But you have received this amount. You have received this amount, but you haven't earned it. Earned it means you haven't provided against it any services or any goods and services. That is unearned income. It is also known as income received in advance. Income in advance. Income in advance. So I'll try to understand this one with the help of an example. This is your trial. In the trial, let us say I write rent. Remember one thing, this time I am reflecting it not towards the debit side, rather I am reflecting it towards the credit side. When rent is reflected towards the credit side, and let us say it is 1,50,000, it means this time your enterprise, your entity is receiving rent. It is an income, correct? So 1,50,000 is reflected towards the credit side. However, in the adjustment, you are given adjustment. One-third of rent, or should I say okay, one-third of rent is unearned. It could be given this way, is unearned, or the language could be like this: one-third of rent is in advance, so either of these two wordings will be available. All in all, it would mean the same thing. That means you have, because it is given in trial, it means you have received this 1,50,000 you have received, but adjustment says that out of that one-third is still unearned. So that means that part you have received, but you haven't provided services against the same. So it will be treated as a liability. So we will have to reduce our income. This is profit and loss account. Rent is given towards the credit side. I will write rent towards the credit side of P&L, 1,50,000. It is given in the trial balance, it reflects that this much has been received, but in the adjustment it is given that out of this 1/3 is still unearned or you have received in advance. So you will have to subtract 1/3. Income received in advance will be subtracted, 1/3 will be 50,000. So you will consider it as if you have received only 1 lakh. This is called matching concept because you haven't given the services against the 50,000. And this extra amount which you have received will be treated as a sort of liability. It is a liability because you are yet to provide services against this amount. So you will write here rent in advance. Rent in advance. So this is how you will have to deal with this. Is it clear to you or not? Still continue with some more trickier adjustments, correct? So next in the line, that happens to be, I think, the 6th one. Anyway, so 6th, in my opinion, that is with respect to what we call interest on capital. Interest on capital. Interest on capital. Interest on capital. Let us say in the trial, this is your debit side, it is your credit side, you are being given as capital. Amount of capital, let us say, is rupees 5 lakhs. I will write towards the credit side. Besides, there is an adjustment which is given to you is interest on capital 10%. Interest on capital 10%. First of all, you need to understand simple fundamental of the business. Suppose owner of the business, let us say Mr. A, B, C is the owner of the business. Mr. A is owner of the business. Correct? And he invests in the business, say rupees 5 lakhs. Mr. A opens a business. You need to understand, you have gone through separate entity concept so many times. What we mean by separate entity concept? It means even though this business has been opened by this owner, Mr. A, B, C, whomsoever he is, you will consider this business as a separate entity from this one. That means you will view and visualize the things from the perspective of the business and not from the perspective of the owners. You will keep him as a separate entity. It means when it is given to you that owner has invested 5 lakh in a business, so immediately you presume as if you are the chief accountant of this business and you construe this particular statement this way, that your business has taken 5 lakh from this fellow. Whether that fellow happens to be an owner, irrespective of that, you have taken 5 lakh from this man, Mr. A. That's a different matter, he is the owner. So because your business has taken 5 lakh, your business is bound to give some interest to that fellow. That is why interest on capital, even though it is going to an owner, but the interest on capital from the perspective of the business is considered as an expense. Is it clear to you? First of all, this thing should be absolutely clear. Now the treatment. As far as treatment is concerned, it is simple, not tough one. Correct? Capital is given towards the credit side, as we know that it is written towards the liability side. We write capital, 5 lakh in the balance sheet. Then this happens to be your profit and loss account. In the profit and loss account, interest on capital, it is given as an adjustment. Two treatments it will encompass. One, it is an expense. You are going to write it over here, interest on capital. I will write in short form, interest on capital at the rate of 10%, 10% of 5,50,000. And this interest on capital, because you are supposed to pay, you haven't paid it yet because it is given in an adjustment. So you will put it towards the liability side, but not as a separate item, rather it will be added back to the capital. Now it will be presumed that owner's capital has gone up to 5,50,000. That means your business is supposed to pay to the owner. There are two types of liability. One, amount which your business owes to the owner, that is reflected in the form of capital. And other liabilities are reflected simply as outside liabilities, correct? So your business now owes 5,50,000. So interest on capital, once it will be reflected towards the debit side of the P&L, and secondly it will be added to what we call your balance sheet. Is it clear to you or not? Now suppose it is given to you this way: debit, credit. Suppose interest on suppose you are being given this way: capital 5,50,000, and in the trial interest on capital is given. I am using the short form, interest on capital. It is being given over here, 50,000. Interest on capital, sorry, I have written it towards the credit side. Actually, when it will be written over here. Anyway, this is the information which will be given to you in the examination like this. And in this example, interest on capital is 50,000 and capital is 5,50,000. So what will be the treatment? This is your profit and loss account. This is your balance sheet. Capital, needless to add where it will come, capital, you are going to reflect it over here, 5,50,000. Because interest on capital is given in the trial, it means this item, effect of this item has already been incorporated. That means it has already been added to capital. You need not require to add it again. Only thing is now that interest on capital, you will post it to the debit side. It's an expense for the enterprise. So it will reflect it over here, 50,000. So this will be the treatment of interest on capital. Is it clear to you or not? Now we take the case of interest on drawings. Interest on drawing. Interest on drawings. Say you have been given, where black man has gone. This is your trial, debit, credit. Capital, let us say 5 lakhs. Drawings, let us say 1 lakh. And in the adjustment, you are being given interest on drawing say 10,000. Often owners withdraw some amount from the business. As each one of you are well aware of this, that such an act and such an amount which is drawn by the owners for personal use, domestic use or private use is known as drawings, correct? Even the treatment you are also aware of, profit and loss account, balance sheet. Capital, as we know, will be reflected towards the liability side. So capital I am going to put over here 5 lakhs. Drawings which are given in the trial will be subtracted from balance sheet because it will reduce the owner's contribution. But it is given in trial, that is why it will be posted only once. So capital will come here, drawings will be subtracted from the capital. Interest on drawings. Now your enterprise will charge some interest. It is an income for the enterprise. Remember one thing. So interest on drawing is an income. You are going to reflect it towards the credit side. Once, interest on drawings. You are supposed to receive 10,000 now from the owners. Your business is supposed to receive rupees 10,000 in the form of interest on drawings from the owners, your business. But your business is supposed to pay to them 490, 5 lakh minus 1 lakh. So what you will do, you will subtract interest on drawings from here. Because now your business would say that we are supposed to pay you net amount 4 lakh and we have to receive from you 10,000. It is better to subtract it from capital. So interest on drawing, as you know, once it will appear towards the credit side of P&L, and secondly it will be subtracted from the contribution of the owners, that is capital. So net liability on this business towards owners is 3,90,000. This is liability side only, correct? We are talking about liability side only. So this is how the treatment will be done with respect to interest on drawings. Is it clear to you or not? So now we pick up the case of interest on loans. Interest on loans. Interest on loans. As far as the interest on loans is concerned, not a very difficult task. An enterprise often takes loans, sometimes it also lends. So both these things are possible. Depending upon the situation which is given in the question, accordingly the treatment will be accorded. This is your debit side. This is your credit side. Correct? Now in this case, let us say it is given to you as loan. A loan is given, let us say, generally it would be given towards the credit side, but it could be given towards the debit column also. Let us say amount is 5 lakh. If it is given towards the credit side, it means your enterprise has taken a loan of 5 lakh, correct? Let us say loan is at the rate of 10%. Loan is at the rate of 10%. And generally in the question it would be given this way. Interest on loan, because you have taken a loan, so interest on loan will be an expense. And expenses will always have debit balance. Let us say here you have written 30,000. Nothing is given in the adjustment. Nothing will be given in the adjustment, generally in cases of loans. But you need to keep in your mind, when it is given towards the credit side, it means you have taken the loan. But if it would have been given towards the debit side, it means your enterprise has lent it out to somebody else, and from those you will receive the interest in that case. But here you have taken the loan, so it is an expense for you. What will be the treatment now? Treatment, this is my P&L and this is my balance sheet. I do not want to shift to next sheet, correct? This is P&L. This is my balance sheet. Whenever in the examination you are given loans in such manner, it is always better roughly, first of all, to compute the full amount of interest. 5 lakh is the amount, 10% is the rate of interest. That means for the entire year, your expenses should be 50,000 in the form of interest on loan. Because you have taken a loan, so during this accounting year, you must have paid 50,000 as interest. Now you look into the trial. Suppose if in the trial, nothing would have been given with respect to interest on loan, then you would have had presumed that entire this amount is still outstanding. But this time, it is given in the trial that interest on loan is 30,000. That means out of 50,000, it means now 30,000 has been paid, and it also means now 20,000 is outstanding, yet to be paid. Now you remember the treatment of outstanding expenses, that's all. So first of all, loan will be reflected towards the liability side, because you have taken a loan of 5 lakh. It is given in the trial, it will be posted only once. Interest on loan is an expense for you, IOL, I am using the short form. It will be put over here, 30,000 towards the debit side of P&L. It's an expense for you. 20,000 is still outstanding because out of 50 you have paid this year only 30,000. So 20,000 is still outstanding. You have to interpret it this way around. So you will add outstanding expenses, as we know, once it will be added to the relevant item. So you will reflect entire 50,000 in the P&L, correct? And this 20,000 is the liability for you, and it will be reflected towards the liability also. So 20,000 you will reflect it over here also. Is it clear to you or not? I give you another variation. Suppose, first of all, it is debit, then it is credit, correct? This time loan amount is given towards the debit side. Loan at the rate of 10%, 5 lakh. This time it is given towards the debit side. When loan is given towards the debit side, it means it is an asset. That means you have lent this amount to somebody else at the rate of 10%. And let us say it is given, because you have lent the amount, so you are supposed to receive some interest. You were supposed to receive this year 50,000, but interest on loan it is written towards the credit side because you are supposed to receive, but it is written only 30,000. That means out of 50 you are supposed to receive, you received only 30,000. So it's same situation, but only difference is that this time it is not a liability, it is an asset, and this time it is not an expense, it is an income. So this is the only difference. So in the P&L, and of course in the balance sheet, first of all, we will write the amount of loan over here. We write the amount of loan 5 lakhs. We will write the amount of loan 5 lakhs. Correct? Then interest on loan which is appearing towards the credit side will be reflected towards the credit side of P&L. You are going to write here interest on loan. That is 30,000. But you were supposed to receive 50,000. So 20,000 is similar to accrued, case of accrued income. So we are going to write here plus 20,000, 20,000 which is accrued, that is earned but not received. First we are going to write it over here, interest accrued 20, and because it is receivable, so accrued interest will also be put towards the asset side. Accrued interest of 20,000. Is it clear to you or not? Is it clear? Perfect. I hope that things have become clearer to you now. Remember one thing, you are bound to get smaller questions related to adjustment rather than separate lengthy question. That is not possible, and the question generally will be tossed up in the question will be with respect to, as I said, what we call provision for doubtful debts, bad debts or discount. Let us say goods given as charities. Goods given as charities. It could be goods given as charities or free samples. Treatment will remain same. Or goods donated. Same treatment will be there. Goods given as donated. Suppose it is given to you in the question that so much worth of goods have been given as charity, or so much worth of goods have been distributed as free samples to promote, of course, the business of the company and the product of the company. And similarly, let us say it is given goods given as donation. Whenever an enterprise distributes the goods as free samples, or when it gives the goods in charities or donates those goods, it reduces the purchases. Whenever we say purchase, it means purchase of goods. It reduces the purchased goods, that means purchases of the business or the enterprise. So that is why, see, it is trading account, it is P&L account, so if goods given as charities is given to you, the first thing which you are going to do is, I'm talking about in the adjustment, if it is given, then you are going to, first of all, you have two alternative treatments. Either you can simply subtract that item from the purchases, or simply you can write it over to the credit side. See, when I am going to write something towards the credit side, it automatically means it is reducing the purchases. So goods given as charities, goods in the form of charities, or free samples, or goods donated, you can write it on the credit side of trading account. When you are writing it towards the credit side of a trading account, it means you are reducing the purchases. Correct? So, or simply you can subtract it from the purchases. It is entirely your, what we call, prerogative. It is your right, your discretion, no doubt. Once it will appear as a reduced item of purchases, you can simply reflect it, subtract it from purchases, or show it towards the credit side of trading account. One and same thing. Secondly, because you have given the goods as charities, free samples, it has reduced your purchases, but it is also a loss to you, because you did not receive what we call any form of asset. See, actually, when I sell the goods, either I receive cash, so my cash increases, asset increases, or what we call my debtors would increase. But here, when I am distributing the goods free of cost, virtually, so it is not reducing my asset. So that is why it is considered as a loss, and that is the reason goods given as charities, free samples, will also find place over here. Goods given as charities or samples, free samples, or donations. All these things will also find place over here. Correct? No further treatment. And now we take one more before we wrap up this particular session. That is abnormal losses. Same treatment. Remember, in accounts there is no treatment for normal losses. Correct? Only abnormal losses. Abnormal losses means such losses which take place or arise on account of carelessness. Correct? So, abnormal losses or because of natural disasters or natural calamities, abnormal losses. So now, as far as treatment of abnormal losses is concerned, that is similar to So abnormal losses. Abnormal losses means loss of goods due to carelessness or due to the fact that you did not exercise caution or because of the fact that some natural calamity in the form of earthquake, floods, disasters have taken place. These are abnormal losses. When we say abnormal losses, it means abnormal loss of goods. Abnormal loss of goods. So treatment will be similar to the ninth one. First of all, you are going to write it towards the credit side. Why? Because you will have to reduce the purchases. You have lost out the goods. Because you have lost out the goods, you will have to now put it towards the P&L also. So same treatment. So as far as abnormal losses are concerned, first of all, you are going to write it towards the credit side. You can also subtract it from purchases. It is entirely your will and desire. Correct? This is your trading account. In the trading account, you will write abnormal losses against purchases, abnormal losses. Correct? Why you are writing here? To reduce the purchases. Secondly, it is a loss. You did not derive any benefit out of it. So that is why you are going to write abnormal loss here also. Is it clear? But often in enterprise, what it does actually, it insures its goods. So suppose an abnormal loss has taken place, let us say worth rupees 5 lakh. First of all, you are going to write 5 lakh here and 5 lakh here. And let us say insurance company has admitted a claim of 4 lakh against the same. So insurance claim, if there is any, first of all, you are going to write it towards the credit side. Or P&L, because this amount you are supposed to receive from the insurance company. Because this amount is receivable, not yet received, because insurance company will take time to pay you, so it will be considered as an asset and will be reflected in the balance sheet. Insurance claim. Correct? So if abnormal loss takes place, full amount of abnormal loss right over here and here, and then if there is any insurance claim against the same, first you put it towards the credit side of P&L and also write it towards the asset side of balance sheet. So as far as your significant treatments are concerned, I have already incorporated all of those treatments over here. Taken a good look over all the adjustments. Now we are moving over to some questions, correct? So these are the notes. Of course, I'm very sure that you are having these notes. and just pluck out question number 16. In fact, we are starting from the reverse, that is on page number 33. Question number 16 is there. This question relates to what we call bad debts provision for discount and all. I've already told you, as far as this particular chapter is concerned, you can expect a question like this. Correct? You should not expect that you are going to have lengthy question in the form of preparation of trading account, P&L account or balance sheet, but we will do such questions also. But just have a look over this question. I will go through the question just to, in case if some of you are not having the notes right now. The provision for doubtful debts account shows a balance of 10,000 on 01/2019, correct? And the bad debts during the year 2019 amounted to 6,000. The sundry debtors on 31st of December 2019 were 1 lakh. On 31st December 2019, there was an additional bad debts of rupees 3,000, and you are being asked to create a new provision at the rate of 10% on debtors. Bad debts recovered, also given to you is bad debts recovered 500. Now, show the necessary ledger accounts and the balance. So this is a sort of question you may expect in the examination, as I have already told you. So how to do this, how to do such question? We have already done lots of questions, correct, of such profile. We have already done lots of questions. Let me pluck out the red pen, right? So just have a look over question number 16, correct? Open down your notes. Question number 16, this is the question we are picking up now. Question number 16, what does the question states? Suppose if I prepare a trial balance, correct? How will I prepare the trial balance? Trial balance as at 31st December, at the end of the year, 31st December 2019 is the date which is given to us. So I am going to prepare a trial balance. We know trial balance encompasses, besides particulars column, 2 more columns. That is, one is debit column, another one is credit column. Correct? Pen is not functioning well. Anyway, question says that the provision for doubtful debts shows a balance of 10,000 on 1st of January 2019. That means this is the provision of last year. So when I will prepare the trial balance of the current year, I will write it in the trial balance, provision for doubtful debts. You need not require to prepare the trial balance. I'm just trying to tell you. This provision actually is of 1/1/2019. Correct? This provision is of 1/1/2019. You are going to put it up towards the credit side. So this is a sort of existing provision, you may say. Correct? Then besides, we have been given the bad debts during the year amounted to 6,000. Now in this year, there were bad debts to the extent of what we call 6,000. So I will write here bad debts. In this year, bad debts amounted to 6,000. I will put it up over here, 6,000. During the year, bad debts arrived. So I am preparing the trial balance at the end of the year. Then, question states sundry debtors as on 31st of December 2019 amounted to rupees 1 lakh. So sundry debtors, you will write here sundry debtors. Sundry debtors, as the question states, amounted to rupees, how much? Sundry debtors amounted to rupees 1 lakh. Debtors will always have debit balance. Remember one thing, when you will solve such question, you need not require to prepare trial balance. I'm just simplifying the things so as to make it easily more comprehensible. Then question further states there was an additional bad debts of 3,000. There was an additional bad debts as on 31st of 12/2019. You take it as a sort of additional information. You got my point or not? You take it as a sort of additional information. Some bad debts have already taken place during the year, but on 31st of 12/2019, you find that there are some additional bad debts. So you cannot put these bad debts in the trial. So it is a sort of what we call additional information. Correct? So bad debts, as you can see now, additional bad debts, you take it as additional information. So bad debts, additional bad debts is equal to 3,000. Then question states create a new provision of 10%. So create a provision. Create a provision. You consider it as an additional information. You create a provision. You are supposed to create a provision at the rate of 10% on debtors. Correct? Then we have been given bad debts recovered 500. See, whenever bad debts will be recovered, it will never ever influence bad debts. It will never ever influence provision for doubtful debts. Correct? What will be the treatment? I will let you know in a short while. Bad debts recovered. So now, the question which was given in statement form, you have reframed it into this form. Correct? Because you have become now habitual of solving the question this way around. So I reframe the question this way. So if you can inculcate this art, then it becomes all the more easier to solve the question. Basically, we are supposed to prepare the extracts of the ledger. Correct? That means we are supposed to prepare trading account, we are supposed to prepare profit and loss account, and besides, we are supposed to prepare balance sheet. So these are the, so we have to actually reflect where these items will be reflected. This is your trading account. This is your profit and loss account. And this is your balance sheet. Correct? This is your balance sheet. By now we are well familiar with the fact that as far as trial balance is concerned, items which appear in the trial balance are posted only once. So whatever provision you are finding in the trial, isn't it, you are going to put it on the credit side. I have already told you it is the leftover part of the provision which we have already made. So this leftover part you can put easily towards the credit side of P&L. You will write here by provision for doubtful debts. By provision for doubtful debts. In fact, writing on the credit side also means subtracting from the items like bad debts, new provision, etc., which appear on the debit. You can also subtract it towards the debit side also. There is no problem. Now, bad debts which appear in the trial balance will find place towards the debit side. Because these items are appearing in the trial, that means their effect has already taken place. So you need not require to actually subtract bad debts which are appearing in the trial balance as per trial. You write in the examination as per trial, not only trial, correct? So that examiner understands. And debtors, of course, will find place in the balance sheet towards the asset side. You are going to write it over here. Debtors, isn't it? Debtors. Debtors 1 lakh. So now all you need to do is to adjust these two, what we call adjustments. One is bad debts. We know bad debts which appear in the adjustment, first of all will be subtracted from the debtors. So we will write here bad debts. Rupees 3,000. I will subtract it once from debtors. Then I will also put these bad debts towards the debit side. Bad debts. I will write in bracket as per adjustments. So bad debts as per adjustment will be treated at two places. Once it will appear towards the debit side of P&L, and secondly it will also be subtracted from the debtors, as I said. Similar will be the treatment of create provision. Now whenever provision is to be created, of course it will always be given in the what we call adjustment. So first of all you are going to subtract provision from bad debts. So provision for doubtful debts, from debtors you will subtract it. But how much provision you will make? Remember your debtors right now is equal to 97,000. And you are supposed to create a provision of 9,700. So 9,700 you will subtract. And this 9,700 provision for doubtful debts shall also find place over here. Provision for doubtful debts. Any adjustments related to debtors will be subtracted from the debtors and will also be reflected towards the debit side of your P&L account. That is 9,700. You are going to write it over here. What I was telling at the time, the provision which exists in the what exists in the trial, generally we are writing it towards the credit side, but you are accustomed to what we could write it even towards the debit side as an item of subtraction. You can carry your habit. You can still subtract this item from the total of these, correct? If you feel so. Now, bad debts recovered. Whenever bad debts will be recovered, we pass the entry bad debts recovered account debit to P&L account. Bad debts recovered account debit to P&L account. Bad debts recovered account debit to P&L account. Is it clear to you? So, actually, what will be my entry? I will write the entry over here. Okay, in this sheet itself, regarding bad debts recovered, see here, what will be my entry? My first entry will be cash account debit to bad debts recovered account. Cash account debit to bad debts recovered account. This will be my first entry. That is what we mean by bad debts recovered. Cash account debit to bad debts recovered. Then this bad debts recovered will be transferred to P&L account because it's a gain to you, so P&L will be credited. So ultimately we are concerned with this entry. So bad debts recovered is a gain to you, so you are going to put it towards the credit side. Bad debts recovered. That is equal to how much in this case? Bad debts recovered is given to you as 500. So you are going to write here 500. Is it clear to you or not? So that is how ultimately you will have to reflect the items in this particular case. So, and question is given in a solved manner to you. So if you want to write, you can write, or if you do not want to, then it is up to you. If you want to write, then you can also. So this will be your balance, 97,000. Further bad debts were how much? There was an additional bad debts of 3,000, right? No, so where is the calculator? Calculator is lying here. 97,000 minus 9,700. 87,300 will be your balance. As far as balance of debtors is concerned, correct? So question is basically interested in knowing where the items bad debts, provision and debtors will come and at what amount. So after having a look over this particular question, we are now having a look over question number 15. Just pay attention. It is also a very small question. I have already told you, you are going to get questions like this, especially based on debtors, provision for doubtful debts, etc. Question number 15. What does the question states? Simple question. Compute the amount of good debtors and the net balance of debtors from the following information. Question is very simple. It is simply asking us, please find out the amount of good debtors and the net balance of debtors. What we mean by good debtors, I will let you know. See here, you have been given debtors. Amount of debtors, hardly 2 marks question. You have been given debtors, how much? You have been given debtors worth rupees 1 lakh. So you are going to simply write here 1 lakh. Then there are bad debts. Of course, if we know that bad debts will reduce the amount of debtors, so I will subtract bad debts. Bad debts amount to rupees 2,000. I will subtract 2,000. I am left up with 98,000 worth of debtors. Now, there is given provision for doubtful debts at the rate of 10%. Logically, my debtors were 1 lakh, 2,000 have already turned bad, so logically my debtors are 98,000, but I have some hunch and hitch that out of these 98,000, perhaps 10% may turn bad. So I will have to create a provision for the same. Less provision for doubtful debts. provision for doubtful debts. You will create provision for doubtful debts at the rate of 10%. So 10% will be 9,800. Now you subtract 9,800 from 98,000. That will give you a figure of 88,200. Actually, these are your good debtors. You don't have any doubt regarding these debtors. That is what we mean by good debtors. Good debtors doesn't mean that they have got very good manners or they are very smart fellows. It means you are sure that these debtors will pay you back. Now, discount to debtors. You are very sure that all these debtors will pay you, but as I told even in the last session, that sometime we want debtors to pay before the maturity date or before the due date, should I say. So in order to make them to pay prior to the due date, we give them a sort of what we call a lurement. Lurement means, what should I call it? Have you heard the word lalach? Right. So we are sort of a temptation. So we are tempting them with a discount. So now I will write here discount, provision for discount in fact, I should write. So discount, that is provision for discount. Discount is also 10%. So 10% discount will be 8820. So out of these debtors, if they will pay early, you will lose 8820 because you will have to give them discount. So this is known as net balance of debtors. This is known as net balance of debtors. You got my point or not? What is the difference between good debtors and net balance of debtors? This is your net balance of debtors. So question asked this much only. Then we pick up question number. I've already told you short questions are very important from this chapter. Question number 14 is an interesting question. Just have a look over here. Question number 14. Question number 14 states that following is the extract of trial balance of Mr. Sedate, and you can see in the trial actually we have been given capital, then debtors 4 lakh, then bad debts are already there, provision for doubtful debts is also there, purchases is 2 lakh and sales are 4 lakhs. Then below it has been given that goods costing 12,000 were sold at rupees 15,000. Your enterprise sold goods worth rupees 12,000, that is goods costing 12,000 for rupees 15,000 to a customer on approval basis. So often this is the practice which is adopted by the enterprise. We are absolutely aware of it. We give them time and we ask them that if you feel that you want to actually buy these goods, please send your approval to us. But so far approval has not been received. But approval hasn't been received so far means till the end of the accounting year. Question further states that write off bad debts 20,000, provide for doubtful debts at the rate of 10%, nothing else is given. So this is the question. Of course, the main part is where all these things will be put up as far as financial statements are concerned. So first of all, I'll prepare a trading account. Then I will prepare a profit and loss account. Besides that, I will also have to prepare balance sheet. This is the balance sheet I will prepare over it here. Correct? Now, one by one we'll pick up. First of all, this is trading. This is trading account. This is your profit and loss account. Then finally, this is your balance sheet. Correct? This is your balance sheet. This is the situation. Now, first of all, we will pick up the items appearing in the trial. One is capital. Capital, I need not require to tell you where it will be written. Capital will be written towards the liability side. So we move over to liability side of the balance sheet. We write over there 5 lakhs. Capital is 5 lakh. Yes, it is 5 lakhs. We shall write it over here 5 lakhs. Then we have been given debtors. Debtors will be put up towards the asset side. Debtors. Amount of debtors which is given to you is 4 lakhs. We have been given bad debts. Bad debts are given in the trial. Because bad debts are given in the trial, we'll put these bad debts only towards the debit side of P&L account. Items which appear in the trial balance are posted only once. I have written in bracket T. It means as per trial balance. In the examination, you need to write full as per trial. Then provision for bad debts is also appearing. We will put it up towards the credit side. By provision for doubtful debts, I will use the short form. It's the legal short form. In bracket I write T. It means as per trial balance, that is 10,000. Correct? Now we have been given purchases and sales. Needless to add where the purchases and sales will appear. So purchases in the trading account, you write purchases have been given to you as rupees 2 lakhs. Besides, you have been given sales. Sales are worth rupees 4 lakhs. Now just pay attention here. The first line states that there were some goods worth rupees 12,000 which you sold out to your customer. Goods costing 12,000 were sold out to a customer for rupees 15,000. So when your enterprise had sold the goods, obviously the goods must have been sold earlier. So whenever the goods were sold, your enterprise must have passed this entry. What entry? Debtors account debit. Because goods have been sold on approval basis, obviously it means these are credit sales. Debtors account debit to sales account. This entry your enterprise must have passed when goods were sold. 12,000 worth of goods have been sold for rupees 15,000. So at that time you must have passed this entry. Remember, this entry has already been passed. You need not require to pass it again. And just for the sake of understanding, actually I am putting up this entry. So which means that when your enterprise had sold the goods or must have sold the goods, at that time this entry was passed, and because of this entry debtors must have increased. As you can see, debtors are rising, and sales too must have been at a higher figure of 15,000. So now, because we have not received the approval, we cannot treat it as a sale because approval hasn't been received. Because approval haven't been what we call received, so we will have to reverse this entry. We will have to reduce the amount of the debtors and reduce the amount of the sales. So this is the entry we will have to pass. Now we will debit sales account. In order to decrease sales, we will have to debit it because sales generally has credit balance. And debtors are asset, and asset generally means always have here debit balances. So I want to reduce debtors also, so I will have to credit debtors. So this is the entry I will have to pass now. Now because of this entry, these two items will get affected. Debtors are reducing, so I will subtract 15,000. That is goods sold on approval. You can write also, correct? Then it will also reduce the sale, so I will write here goods sold on approval. I will subtract 15,000 less goods sold on approval. Goods sold on approval basis. Because approval hasn't been received, so you cannot treat it as sale. So on account of the fact that we didn't receive the approval, we will have to now reduce the amount of sales and the debtors. You got it now? But goods worth rupees 12,000 were sold. When we had sold the goods, 12,000 worth of stock must have moved out of the business. See here, if I am going to sell this calculator to you, this calculator will no more be with me. But because I have sold it out. But because that sale has now been cancelled, so the goods which I sold earlier now will be considered as mine goods. So it will increase my what we call closing stock. Correct? Are you getting my point or not? In this question, closing stock is not given. Whatever amount would have been given, I would have added 12,000 to it. Because my closing stock would increase now, because this sale is now not being considered as sale. So 12,000 worth of stock which moved out of your premises now will be considered as your stock. So that is why whenever goods will be sold on approval basis and approval is not received, the first effect is that it will reduce the sale and debtor. This is one effect. Second effect is that your closing stock will increase by the cost of the goods. So closing stock 12,000 will come here also, and as each one of us know very well that closing stock is also written in the balance sheet. So whatever closing stock is there, you will add 12,000 to it, and then you will put up the figure of closing stock. Is it clear to you or not? So you must understand this treatment very well. The rest of the treatment is write off bad debts 20,000. We know that bad debts which are given in the adjustments are first of all subtracted. So bad debts given to you is 20,000. You are going to subtract 20,000. And then you are going to write these bad debts towards the debit side of the P&L. So you will write here bad debts. You will write in bracket A, adjustments. How much? It is 20,000. Then provide for doubtful debts at the rate of 10%. So we will subtract provision for doubtful debts first, but you have to be careful. 10% you need to compute, but what will be that figure? 4 lakh minus 15 minus 20. So you subtract 35,000 from 4 lakh, you will be left up with 3,65,000. So 10% of 3,65,000 will be 36,500. This much provision you will create. This provision will also appear over here. Provision for doubtful debts, adjustments, 36,500. So this is how the figures will be put up in the financial statements. Correct? Interesting question. I hope you got it. So if you want to show at what figure debtors will appear, I will have to use the calculator. 3,65,000 minus 36,500. That gives me 3,28,500. At this amount, debtors will appear in the balance sheet. I hope you got the treatment of approval. These goods which I subtracted, I will write here goods sold on approval. Correct? So this is how this question will be done. Then we pick up question number 13 to supplement it further. Question number 13. Once again, I will prepare all those trading account, of course. Then I will have to prepare P&L account, then balance sheet. Correct? Almost similar to the last question. Even in this question, first of all, it is written capital. So we know that capital will find place in the balance sheet towards the liability side. We move over to the liability side. We write capital. Amount is actually 5 lakh. So I put it over here. Then even in this question, we have been given purchases and sales in the trial. So trading account, I will write here purchases. Amount of purchase is 3 lakhs. Correct? Amount of purchases is 3 lakhs. Then sales is 7 lakh. Sales 7 lakhs. Then question states that provide 10% interest on capital. We discussed this particular statement in the last session, correct? We know that interest on capital, business will give interest on the capital invested by the owner. It is considered as an expense from the perspective of the business. So interest on capital, first of all, will appear towards the debit side. You will compute interest on capital at the rate of 10%. Capital is 5 lakh. Rate of interest is 10%. So you're gonna write here 10%, 50,000. It is given in adjustment. Once it will appear over here. Because you are supposed to pay interest to the owner, now you are going to add it to capital. Interest on capital. That is 50,000. Then we have been given goods worth 500 were distributed as free sample. We also talked about such goods, correct? The treatment with respect to free samples, with respect to donation, with respect to goods given as charities, and even the abnormal losses will remain same. Whenever goods will be distributed, free sample, of course, to promote the product of the business, or when goods will be given for advertising purpose, or when goods are donated, or when goods are given as charities, it will reduce our purchases. I can subtract it from purchases, or I can put it towards the credit side, one and same thing. So free samples, we are writing it over here in order to reduce the amount of purchases. You can directly reduce this from purchases, no props. So goods given as free samples are 500. Because these goods have been distributed free of cost, so it's a loss to you. Because it is a loss to you, it will also appear in the P&L account. It is appearing towards the credit side in the trading for the purpose of reducing the purchases. And it is appearing over here because of loss, because it is not fetching us any asset or any return. Then commission has been received for 3 years. You can see in the trial there is commission 3 lakh. So commission, we talked about unearned income. You remember this commission? You received commission not only for this year, but this amount of commission is for 3 years. Because it is for 3 years, we cannot treat it as income of the current year. Correct? So I will subtract 2/3, because 2/3 is unearned income which we have received in advance and we haven't given services against the same. So 2/3 I will subtract 2 lakhs. Out of 3 lakh, only 1/3 can be considered as income of the current year. And 2 lakh will be considered as a liability because you have received this in advance. So it is a sort of income received in advance. So I will write here commission received in advance. Received in advance. Commission received in advance. Commission received in advance 2 lakhs. I will write it over here. It is a liability. So this is how you must develop the art of solving such questions. You are bound to get such questions, especially with respect to provision. Now we will do some lengthy question to finish off this chapter. This particular session we will pick up some lengthy question, but honestly speaking, so far what we have had done is more than sufficient for you to see through in the examination, to be very honest with you. I don't think any lengthy question will be asked, but still we'll do some practice. We are picking up question number 12. So in order to do these questions, I will have to prepare one trading account, which I will prepare now. Correct? I will have to prepare trading account. I think this much is enough. Then I will have to prepare your profit and loss account. Profit and loss account. Correct? And then in the next sheet, I am preparing the balance sheet also. So here we go and prepare the balance sheet. I think balance sheet, well, this much is enough. So we go through question number 12. First of all, it is given in page number 31. In fact, question number 12. Where is it? Right. It is starting on page number 30, but mostly available on page number 31. Trial balance of Mr. Hello for the year ended 31st of 12, 2019 is given to you. Now you are supposed to prepare trading and profit and loss account and of course balance sheet. So this is the trial balance which is given to you. You can see in the trial balance you have been given furniture, you have been given buildings, machinery, capital, bad debts already existing. You know the treatment very well now. Bad debts reserve means provision for doubtful debts. Bad debts reserve means provision for doubtful debts. Then debtors and creditors. Stock in the beginning is given, purchases and sales is given, then bank overdraft. Bank overdraft is 2850. Then returns, actually this return is unnecessarily written over here. Returns. Return which is appearing in the debit side is known as sales return, and return which is towards the credit side is known as purchases return. Sales return is also known as return inwards, and purchases return is also known as return outwards. Advertisement 450, interest is towards the debit side, it means it's an expense. Cash, of course, you will put in the balance sheet. Commission is given towards the credit side, it's an income. Taxes and insurance 1250, and general expenses 782, salaries 3300. Some adjustments are also given to you. Stock on 31st of 12, 2019 is valued at 3250. We know the treatment of closing stock, so I need not require to dwell anything about it. Interest rupees 85 is payable on bank overdraft, so it is an outstanding item. Salary 300 and tax 120 are outstanding. Then insurance prepaid is also given to you. 1/3 of the commission is received in advance, and furniture purchased in January 1, 2019 worth 100 is included in purchases. This is important adjustment. Then write-off rupees 100 as further bad debts and reserve for doubtful debts is to be maintained, is to be made equal to 5% on debtors. You read this line as if it is given, create a provision of 10%, charge 10% depreciation on furniture. So this is all about which is given to you. So first item is actually furniture. We know furniture comes in the balance sheet. We move over to the balance sheet, correct? This is my balance sheet. In the balance sheet I write furniture. Furniture is given as 640. But there is one information with respect to furniture. The information which we just read a moment ago was like this. Furniture purchased on 1st January 2019 worth 100 is included in purchases. You purchased a furniture of 100, but you included it in purchases. See, purchases stands for purchase of goods and services. You purchased a furniture. You should not have included it in the purchases. You should have included it in the furniture. So it means purchase of furniture which we included in the purchases now will be rectified. In order to rectify the same, I will add 100 to furniture. Because I purchased a furniture, I did not include it in furniture, rather I included it in purchases. So now I will rectify it, I will increase the furniture, and in the trading account, this is my trading account, question number 12 we are doing. In the trading account, I am going to subtract this amount from purchases. Amount of purchases which is given in the trial is 5475. 5475. So now I will subtract 100 from here because we included the amount of purchase of furniture in the purchases. So amount of purchases will be how much? Amount of purchases after subtracting 100 will be 5375. Is it clear to you? Further, it is given to us that we have to charge depreciation on furniture at 10%. So we will finish it up. 740 is the furniture now. Now we will subtract depreciation. Depreciation is 10%. I will write here 10%. 74. So furniture balance will be 666, and depreciation is given in adjustment. It will be subtracted from the asset, relevant asset, and it will also be put up over debit side of profit and loss account. So depreciation on furniture, you are going to write here depreciation on furniture, F oblique F, I write for furniture, that is 74. We are going to write it over here. Then we have been given next item as building. There is no information related to building. We will simply put buildings over here. Buildings towards the asset side. I need not require to tell you, you know it very well, that is 7,500. Then we have been given capital. Capital will come towards the liability side, needless to add. Amount of capital is 12,500, so we are going to write here 12,500. Then we have been given bad debts. We are now very well familiar with this treatment. We know bad debts which appear in the trial balance is put towards the debit side of P&L, and because it is a trial balance item, it will find place only once. So I will write here bad debts. I will write in the bracket as per trial, so that examiner gets an idea regarding what exactly we are doing. So bad debts is 125. We will write here 125. Next item is bad debts reserve. I just told a movement, bad debts reserve is nothing but reserve or provision for doubtful debts. So it is appearing in the trial. We know the treatment. Bad debts reserve, we are going to put it towards the credit side. Alternatively, we can subtract it towards the debit side. Bad debts reserve as per trial. Amount given to you is 200. So 200, you are going to put it up over here. Then we have been given debtors and creditors. Debtors and creditors, where these items find place, I need not require to tell you, isn't it or not? So debtors, I write, is 3,800. Similarly, creditors given to you 2,500. 2,500. Then we have been given opening stock. Opening stock is given in the trial. We will write it over here. Opening stock, we know, comes towards the debit side of trading account, and we have been writing this amount. Actually, date should be 1/1/2019. Correct? 3,460. Question number is 12. Then purchases we have already written. Now I will write here sales. Amount of sales is actually 15,450. 15,450. Is it clear to you? Then we have been given, in this case, bank overdraft. We know that bank overdraft comes in the balance sheet towards the liability side. We shall write it over here, 2850. Not a very tough question. These questions are easier in comparison to ones which we did. Now we have sales return. There are two methodologies to treat returns. First of all, returns which appear in the debit column means sales return. You can directly subtract it from sales, or you can directly put it over here. So sales return 200, I am putting it towards the debit side. SR means sales return. Alternatively, I can simply subtract it from sales. Similarly, returns which are given 125 are actually purchases return. We can subtract them from purchases, or we can simply write it towards the opposite side. Purchases return. Amount of purchases return is 125. Purchases returns are also known as return outwards. Sales return are also known as return inwards. Then we have been given advertisement. Advertisement is an expense, we know very well, so we put advertisement towards the debit side of, in short form I have written advertisement 450. We have been given interest. Interest is an expense. We will write here interest. Interest is given to us in calculated manner, 118. Then we have been given cash. I will write the item cash. Amount of cash is 650. Then commission is given to us. It is given towards the credit side. So commission we know is given towards the credit side, so it's an income. So commission. First of all, I will write the amount 375, but there was an adjustment related to it. If we will go through adjustment number 4, it is written 1/3 of the commission is received in advance. So it is a case of unearned income. So less received in advance, 1/3 received in advance. So 1/3 will be 125. We will subtract 125. 125 worth of commission has been received in advance. So it is a liability for us because this income we haven't earned so far. So commission in advance, I will write here. Commission in advance. Amount is 125. Then we have been given after commission taxes and insurance. So taxes and insurance. Taxes and insurance. Now taxes and insurance, if we look very carefully, you will find that taxes and insurance amount actually is given to you as 1250, and there is some adjustment related to it. In point number 2, it is written interest 85 is payable on bank overdraft, salary 300 and tax 120 are outstanding. So outstanding tax I am going to first of all add here. Outstanding tax happens to be 120. I am going to add it over here, and at the same time outstanding expenses is a liability. I am going to put it towards the liability side. Outstanding tax, that is 120. Further, it is also given in the very next adjustment, that is adjustment number 3, insurance prepaid. Now because this is taxes and insurance, so adjustment related to taxes and insurance will be incorporated here only. So prepaid, as we know, we subtract. Prepaid means it is expense paid in advance, also known as unexpired expenses. Prepaid insurance. Now prepaid insurance, as you can see, is actually 100. First of all, you are going to subtract it, then you are also going to reflect it towards the what we call asset side. So prepaid insurance. Prepaid insurance. Prepaid insurance in this case is 100. So as far as information related to taxes and insurance is concerned, we have incorporated. You will add 120, you will subtract 100, it will be equal to 1270. I think so. Then we have the next item, general expenses. Remember one thing, general expenses are also known as miscellaneous expenses, also known as trading expenses. Sometimes student fraternity get confused by the word trading expenses. They put it towards the what we call debit side of trading account. Now that's not a very appropriate treatment, so you need to take care of this. General expenses, trading expenses are one and same thing. I always come towards the debit side of P&L. So general expenses 782. Besides, we have salaries. Salaries now 3,300. There is an adjustment related to it. Salary outstanding, isn't it? 300. So outstanding salary we shall add 3,600 is the total amount, and outstanding salary you are going to put over here also. Outstanding salaries. Outstanding salaries 300. So adjustment number 1 is closing stock. We know that closing stock is written over here towards the credit side. First of all, 3250. Closing stock is always given in the adjustment. Reason behind is that generally stock taking takes place after the preparation of the trial balance. So generally, this closing stock never finds place in trial. Closing stock, we will write here. Okay, I will write it here. Closing stock is 3250. So we once again go through the adjustments so as to see to it that we haven't skipped any. First is closing stock. Second is interest 85 is payable on bank overdraft. This one hasn't been incorporated yet. So interest on overdraft, O/D, overdraft, outstanding. Interest on overdraft outstanding, we shall write here 85. And we will also write it over here, outstanding interest on overdraft, on bank overdraft, 85. Then salary we have incorporated, tax we have taken care of, insurance done, commission taken care of, but furniture, depreciation and rectification we have done. Then there is one more information, write-off handed as further bad debts. All the adjustments related to bad debts, related to debtors, are first of all put towards the debit side of the P&L. So bad debts which is given in the adjustment shall once come over here. Amount happens to be 100, and it will also be subtracted from debtors. Bad debts amount is 100. Then we are supposed to create a provision also, so we will create a provision for doubtful debts. So provision for doubtful debts. Provision need to be created at the rate of 5%. So 5% of what? 5% of 3,700. 5% provision for doubtful debts. Correct? 5%. So 5% of 3,700, that will be equal to 185. This 185 you are going to write it over here, and now you will subtract both these items from 3,800. You will get 3,515. So once you have assured yourself that all the adjustments have been taken care of, then only you move over to tallying part. Now you can tally it. When you will tally it, you will either receive gross profit or gross loss. 9790 is the gross profit. I haven't computed, to be very honest with you. You should do the computation just to check it out whether it is correct or not. So gross profit is 9,720. This gross profit we know will be transferred to P&L account. Gross profit brought down 9790. 9790. Correct? Now, we will tally P&L account. There will be either net profit or net loss. In the question, net profit is 3451. This net profit will be transferred to capital. So we should write net profit transferred to capital. Net profit transferred to capital, because it will increase the owner's wealth. Net profit is 3451. So 3451, net profit belongs to owners, so that is why this net profit will be added back in the capital. That is 3451. So finally your capital will be 15,951. 15,951. This is how you are supposed to do this question. This is the complete solution if you want to take care of it. And then this is your balance sheet, starting from here, and these are the items. Correct? You can tally it of your own to find out whether things are in correct perspective or not. So you can see these questions are easier in comparison to the ones which we did. And now we pick up question number 11. Question number 11. This is the next question in line now. So once again, I will have to frame trading account. Question number 11 now we are picking up. We will also prepare profit and loss account, correct? And we need to prepare balance sheet also. You prepare, you frame out the things. I will have a sip of tea, correct? So now this is question number 11, which we are picking up. I have already told you, you are not bound to receive such questions, honestly speaking, because your module hardly has 1 or 2 questions, but smaller questions are there in the module. Question number 11, just have a look over here. We go through the question first, correct? Opening stock is 62,500. Capital is 4,64,000. Debtors, please correct the figures. It is 75,000. And creditors are 3,43,750. Actually, 3 is misprinted. So 3,43,750 is the amount of creditors. Purchases 5 lakh, sales 5,75,000. Then carriage. Carriage, if nothing is mentioned where the inward or outward, always presume it to be inwards. Wages and salary. Whenever wages will be written as an item, always actually put it in the trading account. If it would have been written as salary and wages, then you would have put it in the P&L account. Then commission is 16,750 given towards the credit side. It's an income. Then we have machinery, furniture. Bad debts recovered, we know will find place towards the credit side of the what we call P&L. Then BR and BP is this much. Land and building 5 lakh. Taxes and insurance 21,250. 10% bank loan. It is very important. I did tell you, you have to take care of the fact whether you have given the loan or you have taken the loan. Because loan has been given towards the credit side, so it is a liability for you. That means you have taken the loan. So interest on bank. See here, 10% of 50,000 will be 5,000. You are supposed to pay. In fact, you were supposed to pay 5,000 during this year as interest. But how much you have paid? You have paid only 3,000, which means 2,000 is still payable. Then bank balance is 24,500. Drawings will be subtracted from the capital, as we know. And then there are adjustments. Adjustment, while value of closing stock is 50,000, well, we will incorporate the adjustment first. Closing stock, we know, find place in the trading account. So closing stock is 50,000. I am writing here 50,000. Trading account. This is my trading account. Then closing stock also appear in the balance sheet. I will write here closing stock. Closing stock is 50,000. Correct? Then we have been given in this case wages and salary outstanding is 12,500. Wages and salary. So I will write here wages and salary. Wages and salaries given to us as per the trial. Wages and salary 31,250, isn't it? 31,250. 31,250. Outstanding wages and salaries we will add here. Outstanding amount is actually 12,500. So in the outer column you will write 43,750, isn't it? and outstanding will also be presented in the balance sheet. This is your balance sheet. Outstanding expenses, that is outstanding. Wages and salaries, you are going to write here 12,500. 12,500. Correct? Now next adjustment is with respect to insurance prepaid. Now there is an item, taxes and insurance, which is given 21,250. So this is my P&L. I will write here taxes and insurance. Taxes and insurance. Taxes and insurance. How much is the figure? Figure is actually 21,250, which is given to us. So 21,250 I will write here. There is an adjustment, that is insurance prepaid, so I will write less prepaid. Prepaid given to us is 5,000. 5,000 will be subtracted. We will write in the outer column how much? 16,250. Now this prepaid will also appear in the balance sheet, so we shall write prepaid insurance towards the asset side. Prepaid insurance is 5,000, isn't it or not? Yes, it is. Then we have another information in the form of depreciation with respect to machinery and furniture at 10% and 15% per annum respectively. But one more information, machinery included a machine which was purchased for 38,500 on 30th of 9/2018. So we try to incorporate this, but before we incorporate this, let me start by saying that our accounting year in this case is starting on 1/4/2018, isn't it? Now, if you will look carefully, very carefully, just let me check it out. Machinery is given to you is 1,38,750. You will reach the accounting year on 31st of 3/2019. Now trial balance is of this date. As per trial balance, machinery given to us is how much? Machinery given to us is 1,38,750, isn't it? We have been given that on this date machinery is this much, and in the additional information it is given that on 30th of September, is it? Right. On 30th of September 2018 we purchased a machinery for 38,500. 38,500. I purchased another machinery on this date. If closing balance is this much and a new machinery was purchased here, so what would have been my opening balance? I will have to subtract this from here. So I can get opening balance as 1,02,250. This is your balancing figure. You are getting my point. Closing balance is given, you purchased a machinery here for this much, so your opening balance of machinery must be this much. You are supposed to provide depreciation at the rate of 10%. So 10% on this machinery, you will provide depreciation for the entire year. For the whole year, your depreciation for 12 months will be 10,025. And on this machinery, you will provide depreciation only for 6 months. Only for 6 months. 6 months at the rate of 10%. So 3850 divided by 2 will be equal to 1925. So that means depreciation on machinery total will be equal to 11,950. How you give this depreciation, that is what I presented here. This machinery comprises of two parts. opening balance this much, and the machinery which you purchased on 30th of September, combinedly both these will make up 138750. On this machinery you will provide the depreciation for the whole year. On this machinery you are going to provide the depreciation for 6 months only. So in the balance sheet, your machinery will appear at 1,38,750 minus 11,950, and of course depreciation on machinery will be 11,950. You are going to write here in the P&L account. Where is P&L? P&L is here. In the P&L account you will write depreciation on machinery. $11,950. Got my point or not? And in the balance sheet, you will write machinery 1,38,750, 138,750, 138,750. You will subtract the depreciation. Total depreciation on this machinery is 11,950. So balance in machinery account will be 1,26,600, I think so, or 800. Correct? So this is how you will do the treatment with respect to machinery. Then you have to provide depreciation on furniture, but at the rate of what we call 15%. First of all, find out what is the balance of furniture as per trial. Furniture. As per trial, balance of furniture is 25,000. Simple. You have to provide depreciation at the rate of 15%. 15% will be equal to 3750, isn't it or not? Absolutely. So in the outer column I will write 21,250. This depreciation 3750 will also be presented or towards the debit side. Depreciation on furniture 3750. Then it is given in point number 4, goods costing 10,000 were taken over by proprietor for his personal use, but no entry has been passed. We talked about this sort of adjustment also. Whenever proprietor will withdraw the goods out of the business, the purchased goods of the business will get reduced. So one alternative left up with us is that we can actually subtract it from purchases, or we can simply put it towards the credit side, drawings of goods. Drawings of goods. We are putting it towards the credit side of trading account to reduce the amount of purchases. Amount given to us is 10,000. Now whatever type of drawing is there, that will reduce the amount of capital always. So that is why in the balance sheet, later on when I am going to put the amount of capital, I will subtract the amount of drawings. Less drawings. Drawings of goods. 10,000. I will subtract it from capital. Correct? These are the two treatments of drawings. So in this question now, we have already incorporated all the adjustments. All adjustment number 1 taken care of, second taken care of, third is also taken care of, fourth is also taken care of. So now we are left up with only formalities. So first item is opening stock. We will simply write opening stock towards the trading account. Opening stock is 62,500. Item of trial balance, posting will be done only once. Then we have capital 4,64,000. Capital 4,64,000. I will write it over here. Capital 4,64,000. Then we have debtors and creditors. Amount of debtors, I will write it over here. Debtors amount is 75,000. There is no adjustment with respect to debtors in this question. Very surprising. Then we have creditors. I did tell when I was going through the question earlier that rectify the figure of creditors. Actually it is 3,43,750. 343,750. Correct? Then we have been given purchases and sale So amount of purchases is 5 lakh. I will write here purchases 5 lakh. Purchases 5 lakhs. Correct? Purchases 5 lakh. Then we have sales. I will put here sales. Amount of sales, as we can see, is 5,75,000. I will put it over here, 5,75,000. Then we have in this case carriage. I did tell earlier that carriage always means carriage inwards. Carriage inwards, any item like carriage inward, freight inwards is considered as direct expense, will find place towards the debit side of trading account. So carriage inwards, we are going to put it over here, 10,000. Had it been carriage outwards, you would have put it towards the debit side of P&L. Carriage inwards is 10,000. Whether inwards is written or not, irrespective of that. Wages and salary has already been incorporated. Commission is there. Commission. Amount of commission is 16,750. This time no adjustment with respect to commission. We have already gone through the adjustment. 16,750. Machinery taken care of, furniture taken care of, bad debts recovered. You are going, it is given in trial balance, you are simply going to write it towards the credit side. Bad debts recovered, you are simply going to put it towards the credit side of P&L. It's an income for you. Bills receivable and bills payable. So bills receivable, you are going to put over here 37,500. Then we have bills payable. Bills payable is 33,750. Then land and building is there. Land and building, L/B, land and building. Amount given is 5 lakh. I will write here 5 lakhs. Then taxes and insurance. Taxes and insurance, we have already incorporated. 10% bank loan is given. 10% bank loan is given towards the credit side. It means it's a liability. I did tell you earlier in the last session or prior to that, that whenever interest on loan is given, always compute the full interest. You compute, it comes to 5,000. Now look how much you have paid. You have paid interest on bank 3,000. Interest on bank loan. Interest on bank loan. You have paid 3,000. But you were supposed to pay 5,000. So outstanding will be 2,000. You got it? This outstanding interest will also be reflected here. Outstanding interest on bank loan will also find place over here. 2,000. Then we have been given bank. So bank will be written towards the asset side. Towards the asset side. Amount of bank is 24,500. Then we have drawings. Drawings which is given in trial will come only once. It will be directly subtracted. Drawings means drawings of cash. 62,500. So proprietor might have drawn cash 62,500 for personal use, correct? So drawings, if it is given in trial, you are going to simply subtract it. So these are the items. Because we have already incorporated the adjustments, so we are in a position now to compute the gross profit. So gross profit carried down 18,750. Honestly speaking, I am not making any calculation. So it is better you just compute it also. My purpose is to explain the concept. Gross profit brought down 18,750. Now whatever gross profit is there, After posting it to P&L, now you are going to compute your net profit transfer to capital. Transfer to capital, net profit will be 6,550. 6,550. Is it clear to you or not? 6,550. Now, this net profit you are going to add to capital. Net profit 6550. 6550. Then your net item will be 3,98,000. Then you should be in a position to tally your balance sheet by yourself. Is it clear to you? So welcome again. This is question number 10 now on the cards. Just have a look. In this question we find cash at bank 4,000, debtor 86, creditor 43, stock 62. Then we have fixed asset, loan is towards the credit side. By now you are familiar with this, that it is a liability. Reserve for doubtful debts, also known as provision for doubtful debts, given in the trial, so it will be put up towards the credit side of P&L. Purchases, sales, drawings are given in trial, you will directly subtract it from the capital. Printing charges, electric charges, bank charges, motor expenses, motor car expenses, then returns. Debit side it is sales return, credit side it is purchases return. Salary is 11,000, rent of go down is there, interest on loan is also given. Rates and taxes, discount which is given towards the debit side means it is discount allowed and it is discount received. Correct? Freight on purchases, it is a direct expense. Then we have been given insurance premium. I will talk about this item because some information is related to it. Then office expense, bad debts given in trial, no problem. Capital 162. Now question states prepare trading and profit and loss account, and there are some informations. So we will take up the information first and then we'll proceed to finish up the question. So in order to do this question number 10, we prepare first of all trading and then of course other relevant accounts. This is the trading account I'm preparing. Correct? After having prepared trading, we shall prepare now profit and loss account. Then we'll prepare balance sheet also. Pretty long question. This is the balance sheet. Intentionally I am leaving some space over here because P&L account might need more space. Profit and loss account, then trading account. Correct? Trading account. Question number 10 we are picking up. In the information, first information is related to fixed asset. Correct? First information is related to fixed asset. I am looking out for calculator where it is. There are lots of sheets also lying here. Let me just have a look over the calculator. Yes, here it is lying here. So first item is question number 10 actually. First item, first information we are talking about is with respect to depreciate fixed asset. Now there are lots of fixed asset in this question. We have gone through the question. We found out, in fact it is given fixed asset 1,17,400. Okay. So fixed assets are directly given as fixed asset in the trial. Fixed assets 1,17,400. No props. We will subtract 10% depreciation. It will be 11,740. 11,740. So 1,17,400 minus 11,740. So net amount will be 1,05,660. Now this depreciation you will also write towards the debit side of your P&L. Depreciation on fixed assets 11,740. Then Another information is with respect to closing stock. No problem. Closing stock is actually 44,000. We will simply write here towards the credit side. Closing stock is 44,000. Then in the balance sheet we will write closing stock. Closing stock is 44,000. Fine. Closing stock is over now. Next we are related with reserve for doubtful debts is to be maintained at 5% of the debtor. It is an information, so first of all we write debtors. We know the treatment of the adjustment related to the debtors. Debtors as per trial balance is 86,000. In the adjustment, there is no treatment related to bad debts. Remember one thing, only we have to create reserve for doubtful debts. So I will simply write provision for doubtful debts. Provision for doubtful debts, also known as reserve for doubtful debts. And we have to create it at the rate of 5%. At the rate of 5%, it will be 4,300. Isn't it? So 86,000 minus 4,300, debtors will be 81,700 net. And this provision, because it is given in adjustment, will also be written towards the debit side of P&L. Provision for doubtful debts, 4,300. Then we have in this case information related to insurance premium. Now see actually in the balance sheet, see in the trial balance, actually insurance premium is 5,500. Insurance premium is given to you as 5,500. Now question states below that insurance premium includes 4,000 paid towards proprietor's policy. Suppose I happen to be the proprietor of a business, correct? Now I have taken a policy for myself. So question states that when we take the policy, we have to pay the premium also. So question states that whatever this insurance premium has been paid by the business enterprise, it includes premium of 4,000 which is related to proprietor's life insurance policy. So it is a personal expense. It will be considered as a drawing. I will write here proprietors less proprietors premium. Proprietor's premium means it is a personal expense. You will consider it as a drawings. Is it clear to you? So you will subtract 4,000 first of all from here and later on from capital also in the balance sheet. We will write the capital later on. I will write here proprietor's premium. We will subtract it. It will be considered as a personal expense. It will be considered as drawings. Is it clear to you? Then remaining insurance premium. So remaining insurance premium must be on the policy which might have been taken by the enterprise, because most of the business enterprises, they insure themselves from the various risks and eventualities. So question states that out of 5,500, 4,000 was related to premium which belonged to the policy taken by the proprietor. So that will be considered as personal expense. So business expense is 1,500. But question further states, this business expense covers a period from 1/4/2018 to 30th of June 2019. Just sorry for this trouble. I will have to pick up this phone. So I will explain this point, correct? In order to explain this point, I will have to take another sheet. Okay. See here, insurance premium is 5,500. No doubt about that. We know that out of this insurance premium, 4,000 is related to premium on policy taken by proprietor. Premium on policy taken by proprietor, so it will be treated as personal expense. So 4,000 you will take it as personal expense. Remaining will be considered as business expense. So remaining amount now is actually 1,500 without any doubt. Remaining is 1,500. But question states that this remaining premium which you have paid, it covers a period. Actually, your current accounting period starts from 1/4/2018 and it ends on 31st of 3/2019. But question states that this remaining 5,500 covers a period from 1/4/2018 to 30th of June 2019. This is the problem. That means your accounting year is closing here, but this 1,500 covers a period from 1/4/2018 to 30th of June. So that means out of this 1,500, 3 months premium will be considered as advance. You got my point or not? 3 months period will be considered as advance, so you will have to subtract it. So here in P&L account, remaining amount is 1,500. Now I will subtract prepaid or advance premium. Now advance premium will be of 3 months. But how will you compute? 3/12 or 3/15? 3/15, because this 1,500, as I was talking about, this covers a period of 15 months. So if 15 months premium is 1,500, what will be the premium for 3 months? That is 1,500 into 3/15, not 3/12. Is it clear to you or not? So that is how you are going to compute it, but you will have to exercise a little bit of caution. So 1/5 will make it 300. So 1,200 will be the amount which you will reflect here, and this advance will also be presented over here. Prepaid insurance premium. Prepaid insurance premium. Prepaid insurance premium is actually 300. Correct? So this is the interesting point in this question. In fact, no further information is there. So now we can proceed to do this question. First item is cash at bank. So cash at bank, we will write it over here. Cash at bank. Cash and bank actually. Anyway, cash at bank I have written 4,000. Next item is sundry debtors, which we have written. I will write the amount of creditors. Sundry creditor. S/C means sundry creditors. Don't get confused. It is sundry creditors, correct? I will have to use the short form. What can I do? I have to do lots of questions in the class, so I will have to use the short form. In the examination, you write. Fixed asset, we have taken care of. Loan this time. Loan is also there. Loan is towards the credit side. It is a liability, but there is no percentage given this time, so no problem. 30,000. Reserve for doubtful debts given in the trial is presented towards the credit side, so that is reserve for doubtful debts as per trial. As per trial. 3,000. Then we have purchases and sales. Purchases I will write here. Amount of purchases is 1,40,000. Amount of sales is 2,30,000. 2,30,000. Then we have been given drawings. I did tell earlier that drawings which is given in the trial shall be directly subtracted from the capital account. Drawings 12,000. Only one treatment because item relates to trial. Then printing charges. Printing charges, lots of expenses have been given. Printing charges 1,800. Then electric charges. Electric charges are 2,200. Bank charges. Bank charges are 1,600. Motor car expenses. It is not motor car, it is motor car expenses. Motor car expenses given to you 3,600. Then you have been given returns. Item which is given towards the debit side is sales return. I can subtract sales return from sales, but I am writing it over the opposite side. We can do so. Similarly, return which are given towards the credit side are purchases return, and I am writing it over here, purchases returns. That is 2,600. Putting up towards the opposite side itself means we are subtracting it from purchases. Salaries are given now 11,000, no adjustments. No adjustments with respect to salaries, 11,000. Then rent of go down is given. Rent of go down. Rent of go down is 5,500. Correct. Then we have been given rates and taxes. Lots of expenses have been given. Rates and taxes 2,100. Discount which is given towards the debit side is your discount allowed, 2,400. Discount which is given towards the credit side is your discount received. Discount received is 1,600. Freight on purchases is a direct expense. So freight, it is freight, not freight. Freight on purchases. Freight on purchases 1,200. Insurance premium we have already taken care of. Office expenses, now it is written office expenses. Office expenses in this case 3,000. Bad debts which appear in the trial balance will be written only once over here. Bad debts as per trial 2,000. We have capital now. Capital is 1,62,000. It will be written in the balance sheet. And we have done all the adjustment already. So all we need to do is to find out the gross profit, which you will do it by yourself. But in this question, let me check out whether all the information has been taken care of. Cash, syndicator, stock, fixed asset, loan, reserve, purchases, drawing, printing, electric, bank, motor car, then returns, salary, rent, rates, freight, insurance, office expense, bad debts. Well, we have taken, so gross profit will be equal to 69,200. Or should be 69,200. Then this gross profit which you have derived will be posted here, 69,200. Then you are going to tally your this account, you will drive your net profit or loss, whatever it is. So in this case there is net profit transferred to capital 16,660. You will have to tally it by yourself. This net profit will be now added back over here, 16,660. Then finally you will take, where's the calculator, 1,62,000 minus 4,000 minus 12,000 plus 16,660. That will give you 1,62,660. So this is how this particular question will be done. Is it clear to you or not? So after finishing it off, now we will do question number 9. I am trying to do all the unsolved questions, and solved ones I will leave it for homework. Correct? So question number 9, now we are picking up, but not tough questions, as you have already seen. Actually, I have already told you in this particular chapter, the questions on provision for bad debts or simply bad debts, provision for bad debts are important. Trading account, profit and loss account, and then balance sheet. We are now picking up question number 9, correct? This is your question number 9. This is your trading account. And then this is your profit and loss account. And finally, this is your balance sheet. So the first we will pick up, okay, the information which is given below. Say here, given it is closing stock 1,70,000, I will write it over here, closing stock 1,70,000. We know that closing stock also appears in the balance sheet. So in the balance sheet, I will write here closing stock 1,70,000. Then question states sales include sales tax 50,000, correct? Now this is something new. First of all, I will write the item of sales. You can see amount of sales, actually third item, and not third item, in fact sales, where sales are given fifth or sixth item, it is 8,10,000. Question says sales tax, sales include sales tax of 50,000, correct? So because sales amount includes sales tax, you will subtract it. In fact, this sales tax you are supposed to pay to the government. It is not your sale. So question states sales amount includes sales tax, you will subtract it. So sales tax is actually 50,000. Honestly speaking, nowadays sales tax is not there. Rather GST is in prevalence, but still it is given, so we will have to go by that. So we will subtract it from sales, number one, and it is a liability for us. We will present it in the liabilities. It's considered as a current liability. Sales tax. Sales tax payable. You haven't paid it yet because you have included it in the sales. Then we have been given depreciate furniture by 20%. So not a tough one. Furniture, just have a look in your trial balance. Where is it? Furniture is 3,50,000 as per trial balance. furniture. I will write in the short form, and furniture here is 3,50,000. You will write 3,50,000. You will write the depreciation 20% given. 20% will be 70,000. In the outer column you will write 2,80,000. This depreciation will be presented in the P&L also. Depreciation. That is 70,000. Correct? Then we have advertisement to be written off in 5 years. Now see here, advertisement is 1 lakh. It's a very, suppose if no information would have been given with respect to advertising, you would have simply written the entire amount in the P&L. But here the question states that this advertisement expense need to be written off in 5 years. Actually, what does it mean? First of all, try to understand. See, this is first year, this is second year, this is third year, this is fourth year, this is fifth year. We means the business enterprise, must have spent some amount on advertisement, say 1 lakh. So my entry at that time would have been advertisement account debit to bank account or cash account. Now this expense which we incurred is a loss, of course, because it's an expense, not exactly loss. So you will have to put it towards the debit side. Whenever anything is put towards the debit side of the P&L, it means we are writing it off. First of all, you must understand the meaning of writing off. Writing off means putting the item towards the debit side of profit and loss account. But question states that this advertisement expense should be written off in 5 years. 1, 2, 3, 4, 5. Not in that year itself in which you spend the amount. So we might have spent the amount, say, in the first year. So we cannot debit it entirely to profit and loss account. Question states that it should be written off in 5 years. Now 1 lakh divided by 5, so logic is that every year, that means in the first year we should debit only 20,000, in the second year 20,000, in the third year 20,000, in the fourth year 20,000, and in the fifth year 20,000. So advertisement expenses we have incurred 1 lakh, but out of that we will debit only 20,000 to P&L this year, and this 80,000 we will debit in the next 4 years. So what I am going to do, see here, question states that only 1/5 should be debited. So that means 4/5 we cannot debit. So I will subtract less 4/5. If I am subtracting 4/5, it means I am debiting only 1/5. This is what question is interested in. So 20,000 will be debited in the current year, and 80,000 we will debit it in the next 4 years. Till then, it will be considered as deferred advertisement expenses. Correct? Deferred expenditure. Deferred expenditure means expenditure has been incurred, but you haven't yet written it off. So advertisement yet to be written off. Yet to be written off. 80,000 is still to be written off. It will appear as deferred expenditure. It is a deferred expenditure. Is it clear to you or not? Then we have in this case salaries outstanding 12,000 and salary paid in advance is 10,000. So no problem in this case. Salaries, you write, amount of salary is given to you, 1,20,000. Question states that there is outstanding salary of 12,000. You will add 12,000. Question also states that there are prepaid salaries also. Prepaid, you will subtract 10,000. So 1,22,000 Outstanding salaries will be presented towards the liability side. Outstanding salaries are 12,000. Salaries prepaid, we will write here, prepaid expenses are assets, that is 10,000. Not a tough question. Only point is with respect to advertisement. Rest of the question you can do it by yourself also, isn't it? Capital, now we move over to the trial balance items. Capital is 4 lakh. We will write here 4 lakhs. Then drawings are there. Drawings will be subtracted. Drawings are given in trial. You need to exercise caution. When drawings are given in trial, only one treatment is there. You have to subtract it from the capital. 50,000. Opening stock this time is given to you. Opening stock, remember one thing, opening stock might be given, might not be given, as was the case in the last question. 75,000. In the last question there was no opening stock. 75,000 we have purchases. Then amount of purchases which is given to you is 4,20,000. Then we have sundry creditors. Creditors will appear towards the liability side. Creditors amount is 75,000. You must have noticed these questions are very easy in comparison to the one which we did earlier. Debtors, I did tell you also that since these questions are easier and you have already been tested regarding this question in your earlier phase of education, so at this level they will ask you definitely statement sort of questions as we did question number 16. Debtors are 1,20,000, no information related to debtors. The student feel very happy when no information is related to debtors. Sales we have already written. Now discount is given to you. Discount given in the debit column is expense. Discount allowed. Discount allowed is 16,000. Discount which is given towards the credit side, we will write here discount received. Discount received, as you can see, is 18,000. Commission, we will write here commission allowed. It means because it is given towards the debit side, it's an expense. Commission is 12,000. However, commission given towards the credit side is an income. So commission received is 14,000. Returns, so many times I have told you, debit means sales returns. So I have a habit of writing here. You can say that way we can simply directly subtract it from sales also. Sales returns 16,000. Returns given in the credit column are purchases return. You can subtract directly from purchases or you can put it over here. Purchases returns. Purchases returns are 20,000. Salaries we have already incorporated. Then rent and rates are there. Rent and rates, R/R, 40,000. Then postage and telegram, I will write P and T just to save some time, 25,000. Then we have been given loan. Loan will appear towards the liability side. Amount of loan is 3,10,000. No problem, no percentage is given. It's a liability. Interest, it is not clearly mentioned whether this interest is on loan or not. Anyway, it is interest. 20,000, you will write only 20,000. Furniture already done. Brand names and design. Sometimes students get confused by these items. Brand names, trademarks, copyright, all these are considered as intangible fixed asset. Brand names, designs, you will write it towards the asset side. 60,000. Advertisement is done, cash in hand is now there. So cash in hand, 1,50,000. Cash at bank is 63,000. Freight inward, trading account debit side, freight inward, 20,000. What is duty drawbacks? Duty drawbacks means, duty drawbacks is a word which is related to import or export, but here it relates to imports. When our enterprise imports what we call goods from foreign countries, sometimes government imposes taxes, but sometimes government withdraws that taxes. That is known as duty drawbacks, withdrawal of taxes. So it is a gain to you because your purchase cost will decrease. So duty drawbacks you can subtract from purchases, or you can put it towards the opposite side, duty drawbacks. Putting it over here means you are subtracting it from what we call purchases. Duty drawbacks. Duty drawbacks are 10,000. It is given in trial balance and it will be written only once. So, and we have already done rest of the things, so now we are in a position to tally it out. So just find out your gross profit is how much. Gross profit is 4,29,000. We will write gross profit here, 4,29,000. Now we will compute the net profit. Now net profit actually written 159, I think it is 1,36,000. Let me compute it just to verify the things, correct? 429 plus 18 plus 14 minus 70 minus 20 minus 122 minus 16 minus 12 minus 40 minus 25 minus 20. Yes, it is 1,36,000. So just rectify this one. Your net profit, which is given as 159, actually is 136. Correct? This net profit will be added to the capital. Net profit will be added, and it is 136. So finally capital which will be reflected will be this much, 486. 486. Correct? This is how. So you must have seen this particular session, and I think as far as rest of the questions are concerned, there is one question, only one unsolved question. You will try to do this question of your own, no problem. So rest of the questions are solved. So we finish up this on this count that we have comprehensively covered, in fact much more than what is given in module. In module only smaller questions have been given. Remember one thing, that too related to what we call, as I said, bad debts provision for discount and daters. So on that count we end up this particular session and this particular chapter, but stress upon only that part which we did earlier. Correct? On such note we end up this.